What's up, everyone? Richard here from Hola Prime. Hey, Lara, Walter, how are you guys doing?
Hi, guys.
Hey guys,
Good.
doing fantastic. How are you all doing?
Awesome. Yeah, not too bad. Not too bad. Excited for this week.
Yeah.
So, yeah, maybe Walter or Lara, you want to kick things off for us today? I believe, Walter, you had quite a hectic
Yeah,
UK
a very
session.
active session today.
Here we go.
Yeah, more than happy to get things rolling. Let me just
Awesome.
share my screen. I believe we have a red ISM manufacturing is going to be released in a few minutes. So let me just share my analysis before we get that ISM data come out.
That's at 10, I believe. So it's
Yes,
still
it is.
45
It is.
minutes. And
Yeah,
then we
so a
also have
couple more
Fed
minutes
Chair
to
Powell
go.
speaking at 1.
1 second. Entire window. There we go. Awesome. Can you see my screen now?
Should be coming up now. There we go.
Yep. Yeah, I
Perfect.
saw that earlier.
Yeah, so I wanted to just quickly go through gold today. So a very, very big move, which was sort of like anticipated. It's a shame though that I wasn't able to, although I saw the move happening, the setup that I was looking to take, surprised didn't actually trade into my entry zone on the initial stages of this trade. But I was able to get like a later entry, as you can see right here. So this is a trade I took sort of like towards the end of like that 3 to 4 hour open of the London session. So I'm going to talk about this in a second, but I just wanted to like just give a general overview of what I'm seeing happening with gold and sort of what I'm anticipating to take place over the coming days ahead. So I was like, let me just get rid of, just to make this a lot cleaner. There we go. So, I mean, obviously what we've seen here, the most recent sort of purge on any sort of liquidity is this move down to this low. So the last session, I remember talking about this, the market has taken out, sort of traded into this to fill this fair value gap to the T. So that's a major pool of sell side liquidity. And then thereafter, obviously now what I was anticipating was a move towards the next draw on major buy side on the daily. And as you can see, that was this daily high that I delineated right here at 3,366. And price is very much about to take out this high. I do see that this high being taken out in New York session today. In terms of, okay, what happens after price takes out this high? Are we going to see a continuation towards sort of like 3,435? Or even potentially, are we going to see a move back towards 3,500? And then from 3,500, we could see, potentially price obviously breaking into new highs on gold. But right now, of course, like I don't think that far ahead. I do believe there is a possibility that the market could simply take out this next daily high, and then we could see the market sort of like pull into this trading range, because I do see a bigger picture forming of this being a potential accumulatory range for price that could hold for maybe a few weeks or even a few months ahead. But again, this is me speaking into the future. I don't have a crystal ball in front of me, but like there is a likelihood that if price takes out this high and trades back into the range, then we could see gold stock in this range. But if we see obviously the next daily candle breaks and closes very strongly above this daily high, then obviously then we can anticipate a potential move towards the next high at 3,435. So that's sort of my daily trajectory for now. So I am still bullish right now on gold. Bullish towards 3,336, and then I'll see how price sort of reacts around this level over the next 2 days, and that will sort of give me an idea of if price would give that sort of continuation to the upside or not. And then if we take a look on the 4-hour time frame, so today I had a few targets in mind. So my first target, of course, in terms of buy side target, right? Because of course I was a buyer in today's market, because yesterday was a seller's market. And this is, again, I talk about this theme quite a lot, and hopefully as I have more sessions, I can sort of give a little bit more elucidation on exactly how this theme plays with price, where it's like this move from buy side to sell side pull, and it's a fractal theme that we see taking place on every single time frame. So the 4-hour time frame yesterday. So if, for example, I'm bullish on a higher time frame, but on the lower time frame, like the 4 hour to 1 hour, I see that we have a bearish session. For me, it is like 99% that the next day is going to be one of two things. We're either going to have a bullish session, or we're going to have an accumulatory session, right? So it's one of those two possibilities that I usually mark out. So today, one of the possibilities was we're going to have a bullish session. right? So in line with this, there's two areas that marked on 4 hours. So first was, of course, the next high, which is the high that was taken out during the Asia session, and obviously just going into London. And then, of course, we have obviously these preceding highs afterwards. I didn't mark this high out because I know, like, I had a very strong idea that if price takes out this high, then we are going to see a very smooth run towards sort of that daily high, which is what we've seen so far. So if we go down to the 1 hour time frame, again, what we're seeing is a very clear bullish structure towards that daily buy side liquidity pool. Now, of course, if you're looking at this from the lens of sort of like, oh, you're seeing obviously this being a potential downtrend, right? And of course, you could be anticipating the possibility that obviously price has broken away from this this sort of like bullish channel to the downside, and you're looking at the potential of a breakout continuation trade, and yes, you're in the right direction. But I personally do not see the market pulling all the way back down to retest these highs until after the market has very much finished taking out this high. So of course, like when you're looking for continuation trades, it's important to have in mind multiple areas of interest where you could take that continuation trades from. So just to update this level, so there's two areas of interest right now as we're going into New York session to pay attention to. The first is, of course, this fair value gap, which is the next draw on sell side liquidity that the market has now traded into on the 1 hour time frame, right? So again, market goes from buy side to sell side, and that's how we just is a very structured way of our price move. So we've seen the market has taken out buy side, and then we saw a move into sell side within this imbalance during London session. And then now we've seen a move towards buy side above this prior high. And now we've seen the market trade into sell side within this fair value gap. So from this fair value gap, I am anticipating a potential continuation from there into the next area of buy side pool, which is this daily high, right? So again, this is an area of sell side interest. This is an area that if we are going to be seeing some sort of setup to take a continuation bullish setup from, it will be from this imbalance. So now just to get a more refined picture on this, two things to look into is the 30 minutes and the 15 minutes. So of course, like this red box, you can see this was a previous area. This was a previous order block that at the time was unmitigated. So this was my first area of like my first target price that I saw market trading into today, right? So obviously now we can see the market has cleared this order block and even broken and retested it. And we've seen a continuation from this. I don't need this order block anymore. It's no longer important price area because price is now basically mitigated against that order block. So now it is a mitigated zone. So what the question now is, okay, where is the next area of interest? Well, taking a look on the 30 minutes, right, I can see that there is a bullish cycle with obviously the market giving a break of structure, failing to mitigate against this bullish order block down here. And now we've obviously seen that second high has been created, right? So the market has created a second high right there. And then after that, we've seen the market obviously traded back into the range and has now trapped above this high. So it's a trap because that's a railway track formation back into the range, traded into that 1 hour imbalance below where that red line is. So again, this is giving me now a very nice picture of, okay, so the market is still bullish on the 30 minutes time frame. I am anticipating one more bullish expansion to the upside. So that is pretty much imminent based on the perspective of what I can see here. So now going down to the 15, I want to see a fractal theme in play. So I want to see a very similar structure in play as the 30 minutes. So again, there's that initial break of structure down here. We can see the market. So my initial entry earlier today was I actually attempted to basically go long at the order block with my stop below the low, right? And then my target was the daily high. So this was my original setup today. But what happened was, so as the market broke outside of that order block, it didn't retest. It didn't ping my pending order in. So obviously, like I was like, cool, no problem. This can happen. So at this point, obviously, just waiting for that next opportunity to happen. So that took place after the market delivered that second high. So obviously, it's the second high, which it took a while to happen. Sometimes the second high is like, whereas we usually give a first high, second high, retest, and a rally. But it was a very overly extended run. This was approximately a 1 times ADR run on gold, right? Before the market delivered that second high and then retested. So this is the setup that I took earlier, just towards the end of London session. So there was this bullish order block that was created. Again, it may not be obvious to you on the 15. You can just go into the 5. You can see it's a lot more obvious there, right? So this was the most recent block that was created. That was like, okay, cool. I don't see price because obviously this is a very fast run. I do not see price trading all the way back down here to ping my entry in, but this is an order block that was created before the second high. So if there is going to be some sort of a pullback, it will most likely be into this bullish order block. So what I did, place a pending order at the order block, stop went below the low, and my target is essentially the daily buy side target. That's a 1 to 3 risk to reward, which is not bad at all, right? Not bad at all. What we've seen now is I'm still actually holding this position, but what we've now seen is the market has obviously rallied, trapped above this high. So has it delivered a new high? Yes. But I mean, has it delivered a new high? In my books, no, it has. It looks like it has, because of course that's a new swing high. But the reason I wouldn't count this as the third point is because this is a trap. So what kind of formation is this? This is an evening star formation, a bullish candle, and then you have your consolidatory candle, and then a bearish candle that closes back into the trading range. So therefore, the price hasn't really broken out, right? So this is just a trap above the high, back into the range, into that H1 imbalance below. So I'm actually interested. So of course, like we're looking for a trade in New York session, a good entry point in New York session, right? So for me, that entry point is potentially going to happen in one of two different ways, because within this structure, right, we also have like a sort of a micro, what I like to call a micro cycle, where the market gave this initial high, right? And then thereafter we had obviously your new high. This is your breaker structure. And then within that, we have an imbalance that was created right there. So this is your fair value gap right there. And then of course, within that, below that fair value gap, you obviously have this order block. But I would say that within New York session, right, this fair value gap is most certainly going to be an area of interest to go long. So I'd say like a good opportunity for me to take like a trade, an additional trade to this in New York session would essentially be to buy at the fair value gap below this 4-hour imbalance, stop loss going firmly below the low. Again, this low is perhaps the most safest point for me right now. If I were to place my stop loss there, there's a likelihood the market could swipe below that low and easily get stopped out. So I'd rather go below the low of London, right? And then again, like with this, this could be just a very simple 1 to 2 risk to reward on this trade like that. So I'm actually just going to go ahead and I'm going to place this as an order on my Hola Prime account. So just give me a second. So as I'm actually talking about this, I'm realizing, this is actually a good setup on this. So one second, let me just reshare. I'm gonna reshare my screen, but this time I'm gonna reshare my entire my Hola Prime account. Just a second. There we go. Okay, can you see my?
Not yet. Oh yeah,
Here we go.
Got it. Perfect.
Yep.
So this is how I would execute on this, right? So again, a long position at the fair value gap, stop goes below the low. And with this position, I'm just going to aim for a 1 to 2. Of course, there is a very strong likelihood that the market will obviously take out the daily, but it will also like break above it, right? So there's something known as an overshoot. So we could most likely get an overshoot above the daily high, and that could trade into potentially even $3,372. So 1 to 2 pending order at 3,353, and of course stop going at 3,343. So just going to place that. And again, the risk on this is going to be pretty conservative, 1%. I know some traders may not think 1% is a conservative risk, but for me it is. There we go. Okay, so that's done. Right? So that's essentially my take on gold. So right now, bullish is the most optimal direction on this. Any additions or questions on this, by the way, before I jump onto Bitcoin?
Pretty clear.
No, I was looking at that potential rally on Friday evening after I saw it came back down, because we had the breakout on Thursday. And I was kind of looking at that, knowing it wasn't going to make a move, hoping it might make a move in London, but obviously Asia took the capitulation. So yeah. No,
what do I say, Lara? I say this, right? Gold is super active most of the time. Asia or London.
Yeah, I know. So it is what it is, isn't it? If you're not trading that I know you trade that session, so shame you missed it though.
Are you back home?
I know, right?
I mean,
it's not even a case of miss, right? Because
No,
it's like I was there, I was watching it, I followed my rules. It's just a case
you
of
got
price
stuck in,
just didn't
absolutely.
it didn't
Put
take
back
me in
far
for the
enough.
ride.
Yeah, very good. No
yeah,
questions.
that sucks
Well,
when it happens sometimes, especially when you see a strong move like that afterwards.
Of it, isn't it? And that's the discipline, isn't it? It's to kind of not run off.
exactly.
Yeah.
Because as soon as you chased it, it would have, then go
absolutely.
back to your place where you wanted to
It's
enter.
just exactly right. It's easy to look at this in hindsight and think, oh, you could have chased it and still, got a nice win. But at the same time, you could have entered there and the price could have given, because I'm very used to gold doing stuff like this where it moves and it gives a very aggressive pullback and then rallies. And especially like when you trade something like gold or Bitcoin, really volatile currencies, they can be very unforgiving to mistakes. And that's why it's important to always sort of stick to your trading plan and don't never chase price, because most traders that chase price on gold, they get destroyed. But yeah, so moving on to now the infamous Bitcoin dollar. Now this has been so good this past few days. So again, I'm just going to give the bigger picture, because for me personally, like my favorite trading period for both Bitcoin and gold, because a lot of the time, right, the reason I love trading these two is because they spend a lot of the time, 80% of the time, in accumulative ranges, and then 20% usually trending. But recently that's sort of flipped to script, where the 20% is actually on trending moves, and then like it spends now, like, so the 80% is on trending moves, 20% is in the cumulative phase. But again, I know that that's just the period of time we're in. As we go closer to the summer months, that will flip back again. So we're going to see gold and Bitcoin accumulating more than they trend. So we're in a very active market period right now, but Bitcoin has actually been holding its level really nicely. And that's actually made it a lot easier for me to trade, because when it's just super one directional, it's harder to like catch nice trades. But when it's like trading in a range, it's so much easier to get a feel of the moves. So just a bit of bigger picture. I know a lot of people are like, when is Bitcoin going to go back and create new highs and whatnot? Yes, there is a possibility it could happen, but if you've been watching Bitcoin for as long as I have, you know that Bitcoin could make you wait for another 6-7 months before potentially giving new highs. So there's no point trying to wait for the new highs, especially when you're trading it. I don't really care about the new highs. I just care about what's price showing me right now and how can I make money from it. So my current projection of Bitcoin is this. Right now, we've seen the Bitcoin has basically delivered that final high, what I like to call the final high of the current bull cycle, at $112,000, right? It will break this high at some point, 100%. But I'm anticipating some sort of bearishness towards. So if we go into the weekly time frame, right, I'm anticipating the market to sort of give some form of a rebalance itself before a potential continuation to the upside. A very similar move to what I said down here, where when the market gave this expansion, I was like, yeah, I'm anticipating the market to rebalance itself. And where does the rebalance usually happen? The rebalance usually takes place at the equilibrium of the expansive phase. So if we go from the low of this expansion to the high of this expansion, we can see that equilibrium is that 50%, 61.8% level. We can see the market traded right into that midway point, which is the halfway point of this expansion, right? And then obviously accumulated around that price point for a few weeks before we saw that continuation back to that recent high. So I'm anticipating something very similar to the current expansive phase. So where obviously the low of our most recent expansive phase is this initial low that was created at $74,439 $1,000. And then of course we have the high that was created at $112,000, right? And then of course the midpoint falls at $93,249, right? So what I'm anticipating is some sort of a correction of price on Bitcoin towards sort of these levels, so that 0.5 to 0.618% level over the coming weeks ahead. And then from there, we could see some sort of a bullish continuation, or we could see the market accumulate around this area for a few weeks on end before continuation of the expansive phase. So again, this is just like a longer, higher time horizon projection, right? With regards to the daily, so as of late, the market has taken out sell-side liquidity on the daily, which is this imbalance right there. So the market, so again, buy side to sell side to buy side. So we've seen the market trade into sell side liquidity pool, and then we saw the market trade into buy side at this imbalance From there, I'm anticipating the next move to be towards the next form of sell side pull, which is the low that was created right here. So that's the low of 103,127. And if price were to break this low, then we're obviously going to see a move towards the next low after that. So right now, the next target is the low of last week, right? And then after that, I will then reevaluate and see whether the market potentially correct a little bit higher before dropping back to lower price levels. So taking a look on the 4-hour time frame, again, it's the same thing. So yes, right now on the 4-hour, if you look at this on the bigger picture, price is pretty much accumulating, right? So price is in a range, right? And then just looking at this again, what has price done and where is price heading? Well, from what I can see, price has recently taken out buy-side liquidity pool right there. So we have this prior high. The market rallied, traded above this buy-side pool, right? And then obviously the next move is for the market to take out sell side, right? Now, the next draw on sell side pool that I had delineated for today was this initial low. And obviously we have the lower low down here. So I am actually anticipating the market to trade into the lower low down here. So this low is 103,808. I am anticipating the market to essentially trade into this lower low price at some point within New York session. So essentially, what I will be looking for is a short opportunity or an opportunity to sell into this low within the next few minutes. So taking a look on the 1-hour time frame, again, pretty much the same stuff. So the question I ask is, okay, what has price done? Price has taken out sell side. Where is the next draw on buy side on the 1-hour time frame? Well, the next draw on buy side pool is this imbalance right here. So this fair value gap, right? So there is a likelihood in New York session, we could see the market pull all the way back into this fair value gap. And then from there, we could see a potential continuation to the downside with the next draw on sell side liquidity obviously being this prior low. Okay, so the same low as the 4-hour low. So again, I have now two areas of interest. I'm looking to basically sell from here, from this fair value gap into this low below, okay? So now just to get a bit of a more accurate projection of trend, and I'm gonna go into this setup from earlier today when I go into the 15, because this was a 15-minute opportunity. So in terms of trend, right, what we've seen is obviously the market traded, gave a higher high right there. And then we saw a break of structure to the downside, secondary low, and then the market has now delivered that final low to the downside. So obviously what we are seeing here is the market giving a bullish reversal, and that bullish reversal is potentially going to go into that area of interest that I've delineated on the 1-hour, which is this 1-hour imbalance, okay? So I'm just gonna make that visible also on the 30 time frame, right? So this is my area of interest. So then if we go down to the 15 minutes time frame, right? So this is the general setup for this today. So again, bias was bearish. This morning, the market gave a bearish break of market structure to the downside. Area of interest was this bearish order block that I have in the blue box, right? So that's my bearish order block. And also at that bearish order block was the 1-hour buy side target. So there was basically at the time in Asia session, my target level for buy side liquidity pool was this prior high. So this is the prior high before the new session started. So I was like, cool, this is an order block. This is a prior high. The market already looks like it wants to run. I didn't think the market would pull back into this high, but what I did was I set a price alert and essentially just going into the start of London session, price I basically pulled back into my 15 minutes range. And then when I saw the market basically like trade towards the high, I set a pending order at the high, stop went above the 4-hour. So this is the 4-hour target point. And then I was simply just aiming to trade down to this low down here. So this is a prior low from, I believe this was from Sunday, from the weekend, right? So this was the trade. This was the setup, right? So this is a 1 to 5, very clean trade. I went in super low risk on this one. The reason being is because like my entry was actually very risky. I was like, okay, one or two things can happen. Either price pings this high or price pushes above this high aggressively. And then I get stopped out in a short space of time. So I decided to go in at a super low risk of like 0.15%. Because at a 1 to 5 outer hour anyways, was still a pretty decent amount of money to make on this trade. So what happened essentially was the market basically traded into that high, and then we saw a pullback into the range. Now, this is the beginning of a new bearish cycle on a 15 minutes time frame. So I'm just going to update these levels. The market broke structure right there. After that, we saw that secondary low that was created. And then after that secondary low, we saw the final low that was created down here. And obviously, same as the 30 minutes time frame, they're both at the end of this initial bearish cycle. So what they're doing right now is they're basically giving that sort of like bullish correction / reversal to the upside. So what I'm going to do is I'm going to wait until price trades into that 1 hour high, right? Which should probably be at some point within this live stream. And then once price gets into that 1 hour high, I'll see if I can identify a good entry opportunity to trade a sort of a bearish continuation on Bitcoin down towards 103,820. Oh, and just a bit of an update on my gold trade. So price actually came down and triggered. There we go. Nice. So we saw that nice trigger on that pending order. And obviously now we consider that's now pretty much very much in profit.
Nice.
And we're seeing a very strong run to the upside towards that daily high. So yeah, so let's see how this runs over the next few minutes. We could potentially see this hit TP before the end of the session. Okay.
Very nice.
So those are my updates for now. But I don't have a lot more to share, but I'd love to hand it over to. Thank you. That's how we roll. Thank you.
That's how we roll.
Precision is the game.
Absolutely. Trading your areas, right?
Lara, did you want to take over and share your
happy to
your analysis for the week or for the day, rather?
Absolutely. Well, more likely for the next few days this week, probably. Let's get on. Okay. Let's just, I'm just going to minimize that over there for a minute.
There we go.
So can you see that okay?
Yeah, hundreds.
Yeah, all good?
Yep.
Yeah, all right. I was just going to start with kind of my thoughts around the dollar index to start with, and then follow up with kind of some of the Forex pairs that I feel like are kind of moving in tandem, obviously in the opposite direction, like euro dollar and sterling dollar. So I was just going to go into that, cover that, my take on that. But what you can see here is the US dollar index on the weekly. And obviously there's been an awful lot of weakness, dollar index weakness. But when I've been looking at, right, let me just minimize these a minute. I'm going to see if I've got the right. I kind of want to skip over here because I've got this chart set up slightly differently over here. But kind of when I've been looking at like pound dollar and euro dollar, obviously there's been a lot of kind of upside and a lot of rallying from what's actually quite an interesting area for selling. So I kind of looked at the dollar index on the higher time frame and I was thinking, right, well, where could the dollar be trying to get to? Obviously it took out this high time frame liquidity area, but when I went on the weekly, I can see obviously there's a nice weekly demand zone down here, and this is the EMA 800. So we've had a reaction off of that liquidity, but it kind of just pulled back up and then rejected again and carried on going down. And obviously that's been in line with the pound strength on pound dollar and the euro strength, albeit euro is in breakdown, but kind of still there's been rallies over the last few weeks. So just kind of looking at where that could be heading. So I was kind of looking at that thinking, all right, could we be heading lower down here on the US dollar index to kind of come and take out some of these lows on the weekly and this weekly demand area, and also this EMA 800, which is on the weekly time frame. Obviously from time to time it needs to rebalance, and going back in time you can see that it does do that, and we've had perfect opportunity with everything that's been going on for the dollar weakness to come down, rebalance down there. So when I looked at that, and then I'm thinking, okay, so where then is pound dollar heading? There's been a lot of pound strength, and I kind of saw this on a really high time frame, this 3-month supply area. Wow. And we've had all this weakness going up here, and then when you look at euro dollar as well, it's kind of reached on the 3-month. There's this 3-month order block or supply area up here, and it's actually just tapped into these on OTE, or if you like, the sort of the 70.5% kind of retracement area of this zone. So I'm just like thinking about that and where the dollar looks like it's heading and how these two pairs might be reacting. Obviously, it's quite crucial. We're only just a week away from the 90-day deadline on all the tariff stuff, which is just next Monday. So I don't know, just thinking, we're having a bit of a reaction on there. Obviously, that's a very, very high time frame, but we're kind of in this really kind of crucial area up here. So thinking that, depending on where this ends up, how low this ends up going, probably up here, we're likely to start seeing some kind of a reaction for shorts. I think it went higher than a lot of people are anticipating, but this could be the next kind of major higher time frame targets possibly. So could start to see some weakness when it reaches this area and some strength on the dollar when it reaches this area. But how long that takes, well, who knows? But possibly in the next few weeks. So that would be something that I'd be kind of looking at. But when you sort of looking at charts and you just want to make sense of where do you think price is trying to get to, and obviously the dollar index is kind of giving all the clues. So I don't know, it's just areas to kind of keep in mind and watch and look out for reactions for. But obviously the high time frames, I mean, not many people go much above the monthly time frames. I have heard of one trader who used to look 3 monthly, used to analyze, but there's been such a long period of bullish price action on euro, dollar and GU that you kind of want to see, okay, just going in an increasingly large time frames from my perspective to see where it might be trying to get to. So that's kind of my current take on the dollar index and sterling dollar and euro dollar. I just wanted to go through, I'm just going to turn this off over here now and get rid of that, actually. I just wanted to go through a few pairs that I had my eye on for this week. So just reducing the time frame slightly on that. So I've been looking at Euro AUD. We've had this kind of big sort of bullish price action and this huge high time frame double kind of top pattern that's formed over the last couple of months on Euro AUD, Euro Australian dollar. And we had a breakdown here, which was, kind of a nice bearish pattern. And then we've had this lovely pullback and nice push, the reaction here of a higher time frame imbalance down here, just before this order block, higher time frame order block here, and then pushing up over the last few weeks to pull back to this higher time frame imbalance as well. And then we had just expanding this slightly from Friday. Let me just get this looking a bit closer to see what I was looking at. So I was looking at this breakdown here just sort of last week, and I thought, okay, this is the time to start thinking about getting in short over here. I set an alert up here to try and go short after we saw this kind of breakdown up here after this pattern. And the area that it broke down from, we've got an order block up here, which is marked out. And I set my alert and I thought, perhaps the trains left the station because it didn't quite, my alert didn't go off, and it was also not really the right time of the day to be looking at getting in. It happened this morning at 10 o'clock. So be interested to see, whether we get a final push up here into this area here to maybe take this one short. Because I think that's a kind of a long-term short bias on Euro AUD, and one to kind of, wouldn't be looking to chase that. And if I can't get in there today, I mean, that would be a long-term hold, or you can obviously take your profits or reduce your position size when you get to the next reactions and the higher time frame pullbacks. But those are good opportunities also to scale in. But yeah, so nice one for a kind of decent length of time bearish outlook. Other one, pound CAD is the other one, pound Canadian dollar. So looking at this again, we've got this kind of quite nice recognizable pattern. We had the accumulation here before the final rally up to this area up here, which is higher time frame liquidity. Let me just see if I can see. Yeah, so it came up into this monthly supply area up here with reactions quite clear off of that, and a breakdown here, and then a reaction off a higher time frame imbalance down here. I want to say, yeah, that was a monthly volume imbalance and a monthly fair value gap that then pushed price back up into the kind of top of where that kind of broke down. So this area up here, that's the high time frame or the daily order block or supply area. And then we had the breakdown again on Friday. So been looking at that, thinking, right, okay, how can you get into that? And you can see that that breakdown on Friday left behind a nice imbalance or fair value gap area on the daily chart. And I just marked off this area up here, which is, I'm going to say that's a 1 hour kind of supply area. And then looking for pullback over the next, where are we? So yeah, I mean, depends when it gets there, and obviously when the drop happens, but that would be the kind of area where I'm looking to get in short on pound CAD. And again, kind of longish outlook, long-term outlook in terms of bearish bias. So that's pound CAD. Obviously, we got quite a lot of news on the calendar this week for CAD as well. There's quite a lot of information coming out. I think they've got an interest rate decision, and they've got a few other data information, economical data releases. Wild card for this week, what I'm looking at is, sorry, seem to have massive candles on there. So New Zealand dollar, Canadian dollar. Again, let's go on the daily chart. So you can see price broke down back here in September last year, all the way ultimately down to this other area of institutional activity that goes back to quite a long time ago, where we can see there was a huge reaction. So I had that marked off. And we had a very strong V-shaped reaction from that area. Going down slightly on the time frames, price bounced back up, and we got closed with higher highs on the inside of that structure there. And then we've just been kind of going sideways, which is obviously quite a nice, I mean, this has been going on for a while, but I'm just kind of looking at that thinking, all right, there's potential that this is going to break out of this structure and continue.
Looks like
so
a triangle.
Yeah, exactly. Some people would say it's a flat top triangle, or some people would say that's just kind of like a rectangular structure that, it depends how you kind of look at it. But I think that sort of, I'll take that off because that just messes things up. That kind of sideways consolidation after such a huge capitulation rally, for me, feels like we could be monitoring this for a breakout, in which case that would be great. And then we've got these highs. We've got lots of highs up here, but ultimately this is another, up here is another huge institutional demand supply area. So longs, if we get the breakout of this structure here, longs certainly to somewhere up here, maybe here, like, there's sort of the pullback OTE area, or maybe even higher, and see where we go. But yeah, so I've been thinking I'm going to keep my eye on that one. And then crude oil, interesting, is similar kind of thing. You've got a monthly, right, let's see if we can go slightly higher here to understand what I was looking at on this. It's been pulling back for the longest time, but it's finally kind of reached into this significant area of liquidity, higher time frame imbalance here, with a big pin bar reaction, come back down, and then again we've pushed up from this area, and it's forming a very similar kind of sideways consolidation after that run up. So again, we kind of just had a little bit of a breakout there this morning. So I guess breakout traders might have got in on that, or I guess retesting but what we got on the lower time frames in terms of liquidity areas to keep an eye on. Yeah, slightly. Guess probably just the trend line break if that's one of the things that you look at. But we're about to close on the 8 hour. I feel like there's probably a little area of imbalance in there as well that you could look at. So that's quite an interesting one as well. But we have actually reacted off of, or the initial reaction obviously off this big higher time frame area, fair value gap area, and then reacted again from come back down and then pushed back up out of this structure and reacted one more time. So it remains to be seen as to, you know, whether we're just retesting this kind of area here, breakout and then retest, or see what happens after that. But yeah, that's one that I think is interesting to look at.
Very nice.
And then what else am I looking at? Oh yeah, I was just going to go over some of the indices actually, because obviously they're kind of, it's all a bit at that time, isn't it? So we got the we're a week off D-Day when it comes to the 9th of June and all the tariff stuff and all those conversations that have been happening and ongoing. So I was just really mindful of how price on the indices might react in the run up to that. So clearly we've had this, well, remains to be seen as to whether that's a retracement, but we're getting reactions off these higher time frame imbalance areas here. And I don't know, we're just going to see what happens in here, I think, aren't we? Because when we look at DAX, obviously DAX did break the structure up here, whereas NASDAQ hasn't broken the structure, but we've had this reaction. So, you know, are we going to pull back to this kind of inflection point, which does line up quite nicely with this volume imbalance, which is a daily volume imbalance, and get a reaction off of that to continue up, or what? You know, it's just all remains to be seen, really, based on, I think personally, a lot of, you know, sentiment and what happens next week. So for the higher time frame, I feel like it's kind of just crucial what happens over the next few weeks as to whether, you know, we end up just pushing back down, or whether we can retest this area and go back up. I mean,
we also have Powell on the mic at 1.
Yes.
Powell. So that might also be a bit of a, I don't know which way. Who knows? We'll have to see.
Exactly.
Lots happening.
It's also who knows what's going to happen these days. As soon as anybody speaks, everything feels a bit like you just
everything
don't know what
goes
to
all
expect.
over the place.
It's all over the place. And, you know, I think it's, you know, the indices in particular, I mean, obviously Forex as well, but the indices in particular are really sensitive, aren't they, to sentiment and to those kinds of news releases and things like that. So, yeah, that's kind of, so from the higher time frames perspective, looking at the indices, for me, that's about sitting that out just for a minute and seeing kind of what happens over the next week or so. And then, obviously, Walter's already talked about gold, so you can see that nice big bullish candle, and then some of these other metals is looking slightly different, but there's always a nice push in tandem on silver usually, even though it looks different, and copper's doing this. So yeah, they're all at quite crucial points, I think, aren't they, to see what comes after and what's next. But gold, I think most people are pretty much bullish with it being safe haven and everything happening the way it is at the moment. So exciting times ahead, isn't it? But I think that's me covered on the analysis side. So just keeping an eye over the next few weeks on the dollar index, immediate short term this week, euro, Australian dollar, pound, CAD, and New Zealand CAD, and possibly crude. That's it.
Nice, Lara. Thank you very much.
Thanks a lot, Lara.
Awesome. We got the PMI numbers coming out in 2 minutes. So I'll just quickly go through my charts with you guys. Again, to all our viewers, if you've got any questions, please drop them there in the chat. We got our eyes on the chat. Always happy to help out wherever we can. Let me just show that. Here we go. That's showing up. Yeah. All right. So we got crude oil open here. I'm looking at a higher time frame today. Obviously, crude oil is in a bear market. I don't know why my screen is so fuzzy at the moment. There was some system updates or server updates on the platform today, so I've got no clue what's going on with that. But does it look fuzzy on your side?
No.
Not so much.
Weird.
No.
It does look on my side. Maybe it's my glasses that's dirty, Any case, I'm thinking we stuck here in a triangle. Well, not us. Crude oil, price action wise. Obviously, strong decline into just before the 10th of April. I'm viewing this as a potential A, B, C, D, and then I was actually monitoring this zone that's in red that I try to draw properly there for you. It's lying between 62.92 and 63.48. That price just moved into. That being said, it was just one directional move up, and that's from the close of yesterday at settlement price. We had a gap up higher the start of Sunday's trading. We got right into that zone, but let me just get rid of that squiggly bits there. That's a one directional move. We might be doing something like this. You see, we've got a pretty big gap down here as well. Then go up, and then potentially down. That being said, triangles obviously can and will break in any direction that it feels like. Market's always correct, and you just have to play along. So if that doesn't materialize, I don't think this is the end of this upwards move. You got this downward sloping trend line on the top there, which sort of defines the upper limit of what I still think is a triangle. But if we make it back into that area and we actually break above it, then I'll have to change my count. I still think that we are dealing with a triangle here, but potentially, again, this move to the downside, this being one move up, and then the triangle is actually like a bullish triangle with price doing that, and then we get a decline, giving you an A, triangle, B, and then a C. But yeah, that's obviously a curveball. Traders expect triangles to potentially, if it occurs, let's say, a bearish market, that it will have a bearish outcome. A lot of times you get fooled. You're still dealing with a triangle, but in the triangle was actually still part of the zigzag or the B wave of an ABC formation. You can see I've got my orders here waiting for a potential retracement, and I potentially missed that. Obviously, strong decline that we've seen here. Price, obviously, you can't see in the 5-minute, moved into that area. I expected a potential drop lower. Now, whether that's just going to be the end of that potential E wave, or still need another wave up, create another high low, who knows? But I thought it was enough space to the downside for good risk reward trade short. But after price moved in there, I think you were talking about Bitcoin at that moment, Walter. Price strongly moved lower. We had a nice fair value gap, and it was sort of around about, was it 5, 10, 15, 20, 25 minutes ago that I was hoping for a potential retracement into that fair value gap where I've got my sell limit order, and then potentially a drop lower again. Now, we might still get that retracement, but the way things look now, looks like price is gunning for the overnight lows, around about 61.60. There's a cluster of lows over there. So we can't get a pullback into that area. Then I might have to just cancel that order and, consider it a missed opportunity. That being said, followed the rules, did the analysis, had anticipation what price might do. Price followed my anticipation, executed, not got into a trade, but executed the plan, placed a sell limit order, but boom, price just moved too fast. Then the NASDAQ, here on the 4-hour time frame, and I've actually had a conversation about this, what I still think is an expanding triangle that formed here sort of mid-May and concluded here on the 23rd of May. Expanding triangle generally are very volatile, especially if you're dealing with your last wave. There's 5 waves in expanding triangle, this being an A, B, C, D, and E, and then a strong move upwards. Very aggressive abruptly stopped and a very strong move back to the upside. Now, if you look at the NASDAQ, well, just looking at triangles in particular, if they form on a higher time frame, I'm not talking about intraday or so forth. We're looking at a 4-hour time frame. Obviously, it formed on a 1 hour and so forth too. But I'm just looking at the spans of time that it took for this to form, which was over 10 days, right, or close to 10 days. They typically form whether it's an expansive or symmetrical or ascending or descending triangle. They typically form as the penultimate of corrective within that series of, in this case, bullish move to the upside, or phase, if you wanted to call it that. I'm really zooming out here. So obviously, we had that very strong drop. When was this? On the 4th or the 5th of April, we started getting a move higher. And I'm currently looking at this sequence here as a 1, a 2, and this being a third wave that potentially completed now with a deeper decline underway. And then potentially new highs or another move higher towards new highs. So that's what I'm currently thinking on the NASDAQ. Same goes for the ES or the S&P 500. Now, during the day, I was actually looking for a move higher against this drop, which we did get, potentially giving us an ABC over here. And then that's declined to the downside. Maybe another decline that will meet parity with this first decline here, right? So extending potentially below these lows that formed on the 23rd of May. That being said, as you also mentioned, Lara, with those rate decisions or the deadline on that, the FOMC meetings, I think we're already 5 minutes past that actual PMI numbers. Fed Chair Powell speaking in a couple of hours' time, not a couple of hours, 3 hours' time, who knows? So I'm not really interested in trading the NASDAQ. That being said, it also sort of followed what I expected could happen. If we look here at a 5-minute time frame, just took out the highs that formed on Friday, and boom, straight down again. But with the meeting minutes, sorry, Powell speaking at 1, I'm not interested in trading the NASDAQ. More so crude oil, but as I just explained, I probably missed the bus on this. If price just sort of moved sideways a little bit here, then moved into there, then that would have been a great trade. But if it makes its way all the way back up to this area, then fair enough. I'll go short, but that probably won't happen during this opening bell, the morning session that we're covering right now.
You never know. Like sometimes you can get a very aggressive swing back up, and then price immediately falls down after that.
Yeah, so it's almost like a gold trade. You're kind of expecting something to happen, and then boom, it just moves too fast. But at least you still got into it at a later stage, which there's more than enough time. Still beginning of the week, but that's what I was been looking for. I'm not really going to look at the S&P 500. Obviously, price action very similar to the NASI. So yeah, I have to figure out why my screen is so blurry. It's weird that it's not showing up on your side, but anyway,
maybe it's your eyes.
I think it's your glasses.
I'm actually seeing better without.
Yeah, it's fine. It's not blurry for me.
No, it's weird. It's very, very blurry. I thought so at first, but it's not. I can guarantee you that. I just been for an eye test the other day, so my eyes are still good.
Oh, good.
Touch wood.
Well, we all end up with glasses.
Also, do you have an update on your gold trading?
Yes, I was about to say it has hit profit objective, actually.
Oh, yeah.
Let me just
well done,
again.
And good morning to you, Robert. You're getting ready for
work? Good morning, Robert.
He always pops in before work.
There we go. So I'm just sharing my screen again, actually.
Show us the money. Oh, nice.
Oh, wow. Very good.
Yeah, so that's done. Yeah, so that's now so that's now hit target on this. So if I go back to trading account, you can sort of see
2R.
the trading
Isn't it?
journal. There we go. Yeah, so it's a 1 to 2R.
Yeah.
Very
Nice.
quick trade, nothing
Nice.
crazy. So yeah, so in terms of what I'm looking for, so Bitcoin has actually made a bit of progress. So I'm just going to talk a little bit about that in terms of what I'm looking for today.
Okay.
Oh, there we go. There we go. You can see it clearer now. So entry, exit, done. So let's go back to trading view.
Boom.
So with this now, obviously right now at this point, there's nothing else. I think if this were to keep moving higher, it'll be, we'll be lucky for that to happen. So right now, I'd say it's going to be very risky to try and get in on this now because it's now the end of this bullish cycle on the 30 as well as the 15. The next move to the downside could very well be super aggressive, and we could see a potential move back down to these lows. So, so that's it for gold for now until next time. As for Bitcoin, so I did mention earlier that I was anticipating a move towards this 1 hour buy side liquidity pool. So this imbalance, it's a fair value gap. Price didn't quite get there. Rather, what the market did, it came down and took out that low that I was anticipating the price to take out, so the 4 hour low. So price has tapped that low, which was the final objective that I had for today. But it doesn't mean that that's the end of the move, because if we take a look on the 15-minute time frame, so obviously we saw the market gave that full bearish cycle to the downside. Then we saw a reversal, right? But the reversal didn't quite trade into the H1 buy side target. The market then gave a swipe back down. So what I'm thinking could take place now is this. So I'm thinking now we could see the beginning of a new bullish move. So here's what this could look like. This may not happen today, actually. This price may hold its level in this range until tomorrow's trading session. But right now, I think it's a bias market. I do see the market trading into this high, into the H1 BST, and potentially even trading into, so let's say that the market holds its level until tomorrow, then this will be yesterday's high. This is a very, very major area of buy-side liquidity pool. So I do see a potential of the market potentially taking out today's high. So right now, because price has taken out the sell side liquidity pool first, as opposed to the buy side, I'm now interested in selling. I'm now interested in buying, sorry. So this is what the setup looks like for me, because if we look at this on the 15 minutes time frame, the market gave the initial low, traded into this bearish order block, and then gave a lower low. So we could wait for the market to deliver a break of structure to the upside for a stronger entry confirmation. So what that will look like is the market trades just a little bit higher, right? And then we could see an actual classic break of structure to the upside. Then the market could retest a bullish order block, and we could see a continuation from there. Or alternatively, what I like to look for as well is on the 5 minutes time frame. There are times when the market could give that break of structure on the 5 minutes before it gives the break of structure on the 15 minutes. But right now, I don't see that. Right now, the market is actually just sitting in this fair value gap. So I think it'll be dangerous to buy at this price. So I'm going to give this a few minutes. What I would like to see ideally is if the market were to, for example, let's say pull back, and then we see a very strong break above this point, and then a fair value gap is created after that, then for me, that will be a signal to buy. But for now, it will be very risky to buy price where it's currently sitting, because price could very much deliver a lower low. And then from that lower low, we could then see a much more sustained run to the upside. So if I were to buy and I set my stop loss below the low, I'll be taking a loss that could have very easily been avoided. So Bitcoin right now, because it's taken out the sell side, bullish is my short-term bias for now. But I'm just simply going to be bullish onto my first target, which is 104,700, and then my final target being today's high. So that's it in terms of my updates on this. I'm just going to keep an eye on this. We're probably going to take another trade today on Bitcoin. I'm just going to wait for this to give a much better price action confirmation before executing on this.
Nice. Well done on that gold trade, bud. Very nice.
Thank you.
Walter, out of interest,
I certainly hope Bitcoin will go up from.
Yeah,
Sorry,
we'll see
Lara,
what
go ahead.
Igor says.
No, I was just wondering whether, out of interest, whether Walter trades Bitcoin at the weekend, or do you just stick to Monday to Friday?
I used to trade. I used to try to trade on the weekend, but I have a girlfriend that would shoot me in the head if I look at charts on the weekend.
If there were no days without
quietly.
charts, yeah.
So
Are you back home,
I
by
have
the
to
way,
take my
Walter, or are you still
Saturdays
in Hong
and
Kong?
Sundays. I'm still in. No, I'm in Thailand now. I'm in Bangkok now.
Oh, nice.
Yeah, so I've been here for the past week and a half, and then I head back to Bali on Wednesday morning. Yeah.
How's it been? Have you had a nice
So
time
this
in
Friday
Thailand?
I'll be back in Bali.
Thailand been good?
Oh, absolutely amazing. I think I've gained maybe like another 5 kg or something. The food here is just unbelievably good. Every single restaurant we've been to has just been amazing. So yeah.
Yeah.
I honestly will not be surprised if I'm gaining a few pounds. But Thailand has been really good. I love it out here. It's a beautiful city.
I'm definitely a foodie. I'll pick up a lot of weight. Obviously, getting older.
I mean, you're South African. I'm not surprised. So I've never met a South African that wasn't a foodie. You know, so you guys have amazing food out there.
Yeah, you got to enjoy your food, haven't you? That's the thing.
Absolutely.
100%.
100%. I do all the cooking at home too. So.
Oh wow, fair enough.
That's pretty good, Richard.
So you haven't missed your wife while she was away in Nigeria?
No, I don't think so. No, I'm just kidding.
Not from the fact that you.
I used to be a chef on mega yachts, and I studied in Italy back in the days as well. So yeah.
Nice. What about you, Walter? Any plans to come to the UK anytime soon?
Yeah, so 1st of August, I'll be back in the UK for 2 months. Yeah, for 2 months.
2 months.
So yeah, I haven't been back in like a year or so. It's been a while.
You miss it?
Yeah, I mean,
there's a loaded question.
It's a very loaded question, right? It's a very loaded question.
It wasn't meant.
But there are times when I do, and there are times when I don't. So like I miss the cold. So now I actually spend a lot of time with the AC at full blast, being in a cold room. Like being warm just makes me tired and sleepy and lethargic. So
it's not for everyone.
I like to be cold. No, it's not. But I like to go out and it's nice and warm and it makes the day better. But when I'm actually in a work mode, I like to be in a cold environment because then I focus better.
Okay.
But yeah, I'll be back down in August. It'll be super fun. To be there for like the summer months before it gets cold again. Yeah, in Kent. That's right. You good memory.
I do. Yeah.
Whereabouts you going in London?
Kent's beautiful.
London side.
No, Kent. So Kent is southeast of England, so it's about 45 minutes away from London. Yeah.
Pretty easy to get to London from Kent, though, right?
It's very easy. Yeah, it's like there's a high speed. It takes 45 minutes to get into London. But I don't know. I might stay in London when I'm out there. We'll see. But I'll probably just stay in Kent for like the first half, and then maybe in London for the second half. Gold is still pumping up. That's crazy.
Yeah, popular.
Shooting.
I wonder where it's because right now, I mean, again, I personally believe not buying. Like, of course, there are people that will probably be looking to jump on this buy, thinking it will go all the way back up here, which there is a good possibility it could do so. But then, if you look on the 4 hour, there is like there are other areas, and the market could basically reject this high, and even on the 1 hour time frame, there are intermediate highs as well. So, just want to see where price is going. Look at this. Yeah, so there's a very nice fair value gap here. And it's very important, as this is so important actually. So on the 1 hour time frame, there's this very nice fair value gap just above the high of where price is. So if anything, because there's going to be some sort of a rejection at some point. So if we do see gold pumping even higher, there is a likelihood we could see price trade into this fair value gap. Maybe fill it up to the T, maybe just tap into it, and then from there we could see that decline. But buying right now, I think it's like a lot of it's been more than 1 times ADR to the upside. So, gold has been sort of like overly extended today. So right now trading is sort of like the exhaustion phase of this bullish cycle.
Nice. Wake up, rinse and repeat for you.
Basically. So tomorrow will be interesting because tomorrow is going to be a sell. It's going to be a sell day tomorrow. So excited to see how that works out and how that plays off.
And where from? Yeah.
And where from, exactly. Look at that. So this is now actually about to give that confirmation. So it's price is now broken above this fair value gap. So what I'll be looking for now is, this is a very unorthodox form of execution for me, but this is something that can also work very well. There we go. By the way, the GUI trade, I really like this, the trading view connection on the GUI trade. Because you can just trade directly from the trading view. You don't even need to use any of the other execution on it.
I really like your
yeah, Richard. I noticed, Richard, you prefer the C trader.
Yeah, I tried the what's that? The what do you call that one? The DX trader, right?
DX trade.
Yeah.
Yeah, DX trade.
Yeah. So I tried that for quite some time. C trader, but I did a lot of videos on the MTR on the match trader as well. I think Jannie's using the match trader at the moment. But looking forward to when futures get launched. So we're gonna have some we're gonna have a different platform, also using TradingView.
A bit exciting.
Not exclusively.
Yeah.
Because obviously, I think the charting package is just second to none on TradingView. That's for sure.
Yeah.
No, 100%. Sorry, Lara, you were going to say something there. Sorry, there's a bit of latency in the.
It's not that important, but it was. No, it's not very important.
It is important.
It was more just an observation about your screen color scheme. I think it looks very classy.
What is that green sort of?
Right.
Very nice.
British racing driver green, gold, and cream. It's a good combo. It looks nice.
Yeah. Well, there is actually a psychological reason behind my color scheme.
Of course there is.
So there is a reason why I use the colors, because I used to use for a while now I don't use like the classic red and green candles, because those colors tend to stimulate certain emotional response in the brain. Like if prices fall, then you see a lot of red, it's negative, and then traders tend to like lean more towards positive than negative. So you tend to have a subconscious bias towards buying and selling, and I didn't want to have that, obviously. So I switched to gold for bearish candle, because I like gold. Gold is a very nice color, so I didn't want to be biased against price going down. So that's why I had gold as a nice color. White is pretty neutral, and I want to be neutral in my buying as well as selling. And then green is the background where this stands out a lot better. So I try to like use colors that doesn't incite sort of like positive or negative emotions towards one or the other, and try to keep a neutral feeling as to whether I'm buying or selling.
100%. It's super important, isn't it? And I think it's really interesting how bearish candles being red, obviously red is associated with danger, and the response that we have to that. Where your bearish trade could be your most profitable trade, but when the red, and that, especially if it's moving fast, that's going to elicit a response. So it's something interesting that a lot of people don't really think about, but you want to be
your background,
a zen
being
kind
nice
of environment.
On the eye.
100%. Yeah, definitely.
Especially if you're staring at the screen all day long.
Exactly. You spend a lot of time staring at the screen, so you want to have colors that are easy on the eyes, and wouldn't sort of like give you a strain. That's why, again, that green sort of natural colors tend to be easy on the eyes, so like natural green, natural even purple, blue, stuff like that. It's not too straining.
Definitely.
All right, so
I've seen people with very weird colors on their screens, especially the background.
I've seen some weird stuff. I don't know. Maybe mine is also leaning more on the weird side of things as well.
No,
I don't know.
That's pleasing, Walter. That's really pleasing. I have to be honest.
Try to go for the relaxed feel. So I just want to talk about this before I execute on this. So, so the idea with Bitcoin right now is it's very simple. So this is just to elucidate on this a bit better. So price is just taking out a major sell side pull on the 4-hour time frame, right? And then thereafter, obviously, what we're anticipating is a move towards buy side. The next draw on buy side liquidity is this fair value gap right there. Now, longer term projection on this, just a bit of a refresher, is I'm anticipating daily for the price to take out this daily low down here at some point, right? So right now, there's one of two ways I can play this, because the daily is bearish, and I'm anticipating a continuation to the downside. But on the lower time frame, I'm seeing a bullish reversal taking place in the short term. So I could play this one of two ways. I could either buy now, right? So if the market were to, for example, to pull back to retest this, so if we go on the 1 minute time frame, is more obvious. So this is a bullish order block. I can always do a session on order blocks at some point in the future, because I think order blocks is something that traders either some get a full understanding of it, some get a partial understanding of it, and some, I don't know, they just
especially how you draw it. You know, a lot of traders
it's important to understand what and how it's drawn. Yeah, how it's drawn out today. Because for me, it's like you just have to learn how to visually recognize it. More than anything else. But also understand what goes on behind an order block. Why is it called an order block? So yeah, the general idea is if price were to pull back, entering at this order block, stop goes below the block of order or the 1 minute time frame. And then entering here, I could get a 1 to 2 towards the 4 hour. So if I just go onto the 1 hour, so there's this fair value gap that I mentioned earlier. I can get a 1 to 2 towards this fair value gap. Or that's one way to trade it. The second way to trade it would be to wait for price to trade into this fair value gap. And then I could be looking to sell for a sell opportunity here. And the way that would look like something like this. Where's my marker? So it would look like this. The market would trade into the fair value gap, give a low. No, so it create an initial high, pull back, create a higher high, maybe fill the fair value gap, and then break structure to the downside. And then after that break of structure, the opportunity will be to sell at the recent order block, continuation to the downside. So this is what it will look like. But again, if this were to happen, I don't think it will happen in New York session today. It probably could happen maybe first into the morning in Asia or London session tomorrow. We'll see. Maybe it could happen later in New York afternoon. But for now, the most obvious structure to me is this sort of like buy continuation. So this is the order. I'm just going to place a pending order right there. I'm just going to, again, just risk 1% standard.
So you won't wait for a break of structure only?
No, not in this, because this is just a small pullback. So we can just take this on the lower time frame. Yeah. So I think the margin on Bitcoin on this account is smaller. So I'll just go up.
That's pretty hectic.
A smaller margin than that. So, yeah, so I'll go as maybe like a 0.25% risk. There we go. So that's gone through.
Nice.
All right. So yeah, that's done on that. I don't think there's anything else for today.
And if let's say price goes into that fair value gap on the top there, was it an order block on the smaller time frame? And you don't get that retracement, will you then just cancel the order?
Yeah, because that invalidates the buy.
Yeah.
So if price were to trade into this fair value gap without retesting that 1 minute order block, then it invalidates the buy. Because then price is already traded into the next area of sell side. So from that point, it should be interested in selling as opposed to buying.
Yeah.
Nice.
Very good.
Very nice.
Let's see.
Yeah, so Robert was getting ready for work. He's probably gone already.
Oh, it always is. I feel like this is Robert's morning coffee routine. Wakes up, makes coffee, listens to us,
Yeah.
talk about price, and then heads off to work.
Yeah.
Not a bad
Why
routine at
not?
all, Robert. Not a bad routine at all.
For sure. Right, I'm just going to show my charts now. I think as soon as I stopped sharing the screen, the blurriness disappeared. So it wasn't my eyes.
That's a technical thing.
There's some interference with yeah, there we go. Blurry again. But it looks fine on your side. So yeah, unfortunately, I don't get that bounce that I've been hoping for. I think there's a good chance now that crude oil will take out this cluster of lows around 61.60. Who knows? Maybe after the session we'll get a deeper retracement, but it currently doesn't look like that. NASDAQ, bit of a recovery again. But yeah, I wouldn't be surprised, a bit of more lackluster price action are going into Fed Powell's speech or whatever he's going to be talking about. It might have been most of the morning moves that we'll see. Maybe, maybe not. Just a little bit gutted that I missed that on crude oil. But anyway, such is life, I suppose.
That is my saying, such is life.
Lara, do you have anything to share, wisdom-wise, to all our viewers? Lara is our in-house trading psychologist. So please ask questions. Now's your time.
Pearls of wisdom regarding psychology. Yeah, well, it's just what you guys are talking about in a way, isn't it? Because it's like you master the discipline, but it doesn't mean that you're not going to get those moments of kind of frustration and kind of disappointment if you don't get in or if it doesn't come back. So is it how you just got to kind of just strengthen that muscle, don't you? That idea that come to a place of peace with the fact that you're not going to get in on every trade, and even if you do all your analysis and it all looks great and you can see exactly where you think it's going and it does go there, being disciplined is way more important, isn't it? But you're going to have to accept that there are times where that is going to feel slightly disappointing.
Yeah, well, at least if it went, sort of into the direction you expected it was, at least you did something right. Shouldn't feel too bad about it.
Absolutely. It's kind of like you always feel a lot less upset if you take a loss when you stick to your rules than you do when you take a loss when you don't stick to your rules. Like you just end up beating yourself up. So sticking to your rules is a thing, and nothing's predictable, is it? So I just feel like it's about discipline is king, but that doesn't mean that you're not going to, you're still an emotional being. You're still going to have feelings around certain things, and doesn't matter that you've just got to accept that sometimes that's going to be the case, and you're going to have days where you're going to feel a bit like, that's a shame, but it is what it is. Above all, I'm disciplined, and that's what gets consistency, is that discipline, isn't it? As we've discussed before. So
yeah, because when you take a loss, I found that
sort of go hand in hand as well.
I found that taking losses against my trading plan is actually a slippery slope to
having
over trading and doing things that actually leads to cascading losses, as I like to call it. So it's like when you experience that a few times, you realize that the trigger for this is taking a trade outside my plan that loses. Why not just wait? Take trades, and if it loses in the plan, that's fine, no problem. But the worst are the ones that loses against the plan. It's sometimes really bad, because especially when then price goes in your favor, and then you realize that if you had stuck to your plan, you would have made money, right? But you didn't stick to your plan and you lost money.
And then you just end up feeling absolutely lousy. But understanding that taking
trades your plan, and last minute you pull out because of fear. Don't take it.
I think we've got a slight delay going on here.
I'll keep quiet.
No, please don't. No, it's just that I can't remember what I was going to say. Understanding that taking trades against your plan it's not that you're weak or there is actually a process that's happening. And so once you understand that process is happening, you can harness it. Like there's nothing wrong with you per se because you take plans against your trades against your plan. That's the humanness of you. It's just understanding what processes are happening for you that lead you to doing that, and then stepping back and looking at that with objectivity and saying, okay, that's happening because, and I really need to just understand that that's my normal human psychology at play, and I've got to learn to master that. It's not that I'm broken or flawed or any of those things. I'm just a typical human. That's my survival instinct kicking in. And if I can look at it in that way, next time when I feel compelled to do that, I can step back and look at it a bit differently.
Exactly.
Yeah,
I think what helps a lot with that too is keeping a journal, especially, I mean, I still do, but maybe not as dedicated as I did, especially when I went through a phase where things were really difficult. It was just like huge drawdowns, breaking your rules, and then you follow your rules, and then you don't get into a trade, although you followed your rules because you're fearful, all that sort of stuff.
Yeah.
And, you're the only person as a trader. It can be a really difficult road to walk, a lonely road to walk, Also, rather than taking a screenshot of, let's say, your setup, some traders will classify as an A or B or C setup. Go be honest with yourself and note exactly the feelings that led up to that. How did you feel? Did you feel excited? Did you feel overconfident?
Yeah.
Did you feel fearful?
Yeah.
I mean, anything like, do you feel sick? Did you have a fight with your wife? It could be all of these sort of different things, and go note them down.
It's really interesting
to make those mistakes again.
It's really interesting you said that today, Richard, because there's I've been looking at, I did a piece earlier today on exactly that, and there is evidence that supports the idea that once we become self-reflective and emotionally aware of ourselves, that then over time sharpens our decision-making prowess, if you like. We get better at making better decisions the more reflective we are, because we understand ourselves, our own processes. And so it's been shown that traders who do that regularly, that do that sort of post-trade reflection, are much more likely to reach consistency. Because self-awareness is everything.
Oh yeah, 100%. And I think self-awareness is also a skill. Is also a skill, just like any other skill that you develop. To become more, you could become more self-aware. But most people are at a certain sort of level of self-awareness that is not suitable, that is not good enough to make improvements on. So that's why I think like being able to develop that skill of self-awareness over time through journaling. Like always have a book next to you where I just take notes of stuff, and even like recording. I find audio recording as well. Sometimes voicing out your thoughts and listening to yourself is something that helps a lot. Keeping spreadsheets, doing sort of like periodical look backs on your trading performance and seeing where your strengths and weaknesses were. But these are the kind of practices that improve self-awareness, and the more you do it, the more aware you become. Like Richard, like I don't journal as much as I used to journal in the past, where I was very sort of like, I did it pretty much every single day. But the awareness that I've developed from those early stages of journaling is still there, and it's still something
like muscle memory,
right? In my trading. It's a muscle memory. It doesn't just go away, Yeah.
But you also have to be humble enough. Like humility plays into it, because you can journal, but if you can't be humble enough to look at where you're going slightly wrong or what your flaws are, then you can't really do anything. Yeah, ego, exactly. You can't really do anything to improve that. So you have to be prepared to look at yourself and what you're doing and how you're responding to the markets, and be willing to improve on what needs improvement. But you also have to get to a point where you're willing to look at your own flaws. And that's often a journey for some as well.
Yeah.
Yeah.
For sure. So Robert's saying, I
Stare
need
at
to learn
yourself
why
in the
I'm
mirror.
breaking the rules. Yeah, Robert, it's geez. It's trying to be honest with yourself. I mean, you probably heard all of these things we're telling you right now, right? Before. But if you can't really go and like implement them yourself, then that's unfortunate.
It could be also a personality trait as well, because some people have the personality where they're prone to breaking rules, and others have a personality where they're so much more easy. Like living in Asia, for example, one thing I realized is like a lot of Asians, they just find it so easy to follow rules. Like it's just second nature to them. It's not something they need to think about. Whereas in the UK, I noticed that there are some people that find it hard to follow rules. And I'm someone that is sort of like in the middle where I love rules, but I don't always love to observe rules if I don't understand them. I like to understand the rules before I follow it. So I know that about my personality. So that's why, like, when it comes to my trading rule sets, I know that the only way I can follow a set of trading rules is if I understand why I need to follow it. So I think, like Robert, if you find yourself to be someone that is not naturally a rule follower, or you're the kind of person that prefers to create your own rules, or you're the kind of person that likes to understand a rule before you follow it, then maybe the reason you may not be able to abide by a trading plan is because maybe you weren't the one that created those rules for yourself. They were maybe given to you, or you discover them from some YouTube video you watched. So like, if you don't understand your rules, try to first find a way to understand, okay, what are these trading rules that I'm following? Why do I need to follow them? What are the benefits if I follow them? And what are the downfalls if I do not follow them? And also, like, what is the fundamental? So I like to dig deep in my trading. If someone talks to me about order blocks, I don't just like to think, oh, order block, okay, cool, I'll buy and sell from order blocks. I like to understand, why do order blocks actually form? Because the market isn't just charts and candlesticks. There is a deeper underlying element to why price moves the way it moves. There are so many different players involved in the market that creates the dynamic that we see every single day. So for me, like, I like to dig deep into that. So why do order blocks form? Why do order blocks create areas of price deflections, where the price could easily either bounce and reject an order block, or price could trade into an order block and fit it? So why does that reaction happen? What is the underlying element behind it? And then when I dig deep into that and I begin to get a much better understanding of it, now when I have a rule set that says, okay, order blocks are areas of interest that I should buy and sell from, it's so easy for me to follow that because I understand the underlying dynamic behind it. As opposed to if someone just said, hey, Walter, here's a rule to follow, just follow it. I'll just be like,
no, because then in that way you've got your own motivation, haven't you? It's not just box ticking. It becomes something that has meaning to you, and that changes everything. So yeah.
Robert says, I'm exactly like that. I want to know why. Robert, you cannot know. You are the way you are. You can spend some, you can either try to know why you are the way you are, which is going to take you a lifetime and it's going to be a lot of time wasting, or you can know the way you are, accept it, and be like, okay, this is the way I am. How can I adapt my trading in a way that works for me and in a way that allows me to actually benefit from it? So it's a lot easier to do that, and it takes less time to do that than to try and discover why you are the way you are. Because then you're looking at you're going back to your childhood traumas, you're going back to your upbringing, your parental upbringing, your environmental factors, and all that is.
Are you an engineer, Robert? I know a lot of engineers that try to trade and they just cannot. They want to understand everything and they cannot get over the fact that you'll be wrong so many times. And they want to know exactly the why. There's no wrong with like knowing your rules. It's like trying to understand why you were wrong when you're actually almost dealing with a market that's going to prove you wrong a lot of times, more often than not. Don't break your head about that. You have to accept the fact that you will be wrong a lot of times. What I also found very interesting and helped me a lot with, I wrote a book about market geometry and specific techniques of how to use at pitchforks, a bit more advanced techniques, more so than the normal traders would use in their analysis. I'm not showing them during these sessions, but there was a whole methodology behind it. And actually, I knew this all in my head. And a lot of these pieces of the methodology I took from different traders, made it my own. But I was asked to actually put it into writing, into a book. And that was quite a journey and quite difficult, I must say. It took me, I think I wrote something like 180 pages of a document with screenshots. You know, it went into how do you analyze this and this and this, different settings. You probably talk about indicators. I used market geometry and those sort of stuff. And put your thoughts on paper, especially if you have a strategy. Try to write it down. It's actually way more difficult than you actually think it is. And what's those rules you're going to stick with? And I always say that if once you start trusting your strategy, it'll be easier to execute it. But maybe go through that process of actually trying to put what's in your head on paper. It was for me at least way more difficult than it sounded in the beginning. So yeah.
No,
Robert says he wants to be a
those are really
psychiatrist
good
initially.
experiences.
First, because I wanted to know why I am, and I think, and then help people. What are you now, Robert?
By the way,
not a psychiatrist.
I think we've now reached. It's now 11:45.
Oh, you're right. It is 1:45.
Yeah,
awesome.
But beforehand, I mean, I could just quickly share this update, right, on Bitcoin, and then we can wrap up.
Okay.
Okay, so there we go.
Should come up now. There we go. Oh, it's pulling back.
Awesome. Yeah, so now that's pulling back right into that order block. So just a bit of a refresher on this. So this is where the pending order is created, and then a stop loss below the low, and then of course targeting the imbalance. Now it's also important to note as well that price hasn't. So if you take a look on the 1 hour time frame, price did tap into that imbalance, right? It did tap into that H1BST. And if you also take a look on the 4 hour time frame, you know, it sort of retested this this candle right there. So there is a likelihood that the market could actually keep pushing to the downside, but I do see a very strong possibility because this is a very classic break of market structure to the upside. So I do see a good possibility of the market retesting this bearish candle, giving one more push to the upside, and then thereafter we could see that bearish continuation. But again, price could hold its level until tomorrow, and then tomorrow we could see a sell day, or we could see again the market could easily take out the low of the current low of today. But yeah, so that's the setup. Anyways, that's what I just wanted to give you guys an update on. So that's now sort of like trading to trigger very soon. But I'm still holding this long stop goes below the low, and the target is 1 to 2 within that order block.
Nice.
So yeah, so that's it from my end.
Okay.
Lara, thank you for joining us again. And
it's lovely to see you guys.
Wisdom, Walter from your side. Lara, I'll probably see you next Monday, and Walter maybe time again. Awesome.
Yeah. Enjoy the rest of your trip. Travel
I'll see you on
safe.
Friday. Okay, thanks a lot, guys.
Cheers, Robert.
See you next week.
Bye,
guys. Bye.
Bye-bye.
Cheers. Bye.
Bye-bye.
Paul and Igor, how's it going, guys?
Hello.
To you,
It's
hi,
cool.
Jannie, how's it going?
Hi.
Yeah, do you have a good weekend?
Well, I haven't been seeing much of Igor last week, so I've been missing him a little bit, honestly.
Yeah.
Yeah.
He's been lying there in his bed at night with his Winnie the Pooh teddy bear with
Hey,
Igor
man,
all
good
written
coaches are hard to find.
Very true. Like, how was your? Did you guys get any opportunities today?
Not touching
No.
anything after the end of last week. Stopped out a couple of times, so I'm just letting it settle.
Okay, great. How about you, Igor?
I'm trying to hedge something. Nothing special. Nothing special.
Oh, trying to hedge something. Oh, you like the complicated stuff. I like that. Okay,
Yeah,
well, I'll just show my screen if you don't mind. I'll start with the.
Of course.
I'll start with the pound US dollar. The pound US dollar, obviously, that was a beautiful retest of the weekly resistance. So we broke out of the weekly resistance area and it came for a retest. And that was the entry. Okay, Igor, you'll be happy to hear that I also made a mistake. I moved my trade to break even and I got stopped
Yes.
out. Not stopped out, but it hit my my break
Classic
even
story.
level. All right.
Classic story.
Well, that's what happened. I'm not sure if it's classic, but it's definitely it was a mistake that didn't sit very well with me. But today you can see we pushed beautiful to the upside. And if you're watching and you got that entry, beautiful, well done. This is a classic breakout retest trade. Okay, and this is a very solid time frame as well on the 4 hour. So I wanted price to, I think it was on Thursday, I wanted price to pull back and just like pull back and then push back up, which it did. But the new 4 hour candle, yeah, that's the entry criteria. It first needs to break the high. And so that's really, really important because you want to see that price is following through. Right, and it didn't happen, but today we are pushing back to the upside. So, but there are other entries you could have found, like, and that's on the 15-minute time frame. This is the one I managed to get, so it's not all doom and gloom. Obviously, it's not on this account, but anyway, I'll still show you. I don't have my GUI trade platform open. Sorry about that. So yeah, like that really nice strong push to the upside and the retracement right to, well, the 61.8. And then remember, when you get to those levels, you want to get confirmation that price is rejecting from those levels and reversing away from those levels to the upside. So, you know, that would have been a really good entry. I didn't get it right here. I got it a little bit later because I don't get up 5, believe it or not. But still, that's okay. Now, in terms of your targets, now if you did manage to get in here, you're in a very, very good position. Just to delete that line. because obviously for today is the new the start of the new candle. This is a beautiful spot if you got this, because now you are in a position to catch the monthly ATR, right? You can really ride this and don't worry about news events or anything like that, pullbacks and all of that noise, because you've got such a beautiful entry here that you can absorb all of that nonsense. Okay. Now, I'm not saying it doesn't mean you know this can reverse and break it. Of course, that can happen. But if you look at the longer time frames, on the daily, the weekly, this is not going to look good. So, Igor, you're going to have to show it on your chart if you don't mind. But that's the breakout. Okay, that's the breakout. This is the weekly resistance area, and then we got the retest on the 4 hour. Okay, beautiful. So you can leave that trade open and you can ride it and just watch your key resistance levels on the longer time frames, like the weekly or the monthly. There's not much on the daily, and then you'll see that it's a few hundred pips away. So, and the monthly ATR on the pound US dollar is typically, it's about 450 pips, something like that. So that's it's not very often that you get a perfect entry to leave the trade open so for a longer period of time, so that you can catch a really nice move, especially like this. Okay, it doesn't happen very often. So yeah, I'm definitely bullish on the pound US dollar. Obviously, we've got a resistance just above here, so it can reject from that level, maybe a pullback, and who knows what's going to happen there. But it would be great if we can get a breakout and then a retest there as well. Okay, and that could potentially give you a second opportunity to enter the trade. Okay, or if you get a pullback, you just need to identify the key levels of interest, and then you just you trade it from there. But we're not there yet. Let's just wait until we get to that resistance level. This is the 4 hour time frame, so we can get there pretty quickly. And you know, but all the clever stuff, stick around for Igor. He's the master when it comes to all the fundamentals. He'll definitely be able to fill you in all the details and when are the important days and so on. I'm just the bricklayer when it comes to trading, just basic. This is a breakout. Look, there are three. I've mentioned this maybe a couple of times now.
Bricklayers.
No, they're great people and they do a proper job, but it's pretty, most people can do it if they just follow the rules.
Because I can trade, but I can't build a wall.
So, yeah, no, definitely nothing against bricklayers. I mean, I used to work in a workshop. Did you know that? For many years, actually.
Well, I didn't know that. I did not know that.
Yeah. And, I was, anyway, we built like ground supportment equipment for helicopters for the military of defense. Like those were the helicopters that went to the wars of.
Okay, well, that's a cool job. That's a cool job.
Afghanistan and Iraq. Yeah, that was pretty. It was different. Different.
You're not making tow bars, right? You're making something really cool, so it's good.
Yeah, that was pretty cool. That was. Yeah, I was always like proud to say what I was doing. Anyway, what was I going to say now? Oh yeah. No, I still can't remember. But anyway, so the pound US dollar, that's the resistance level up here. So I think we could potentially look, the trend is up, but when you add a resistance level, you could typically expect a bit of noise, very similar to over here. Right. It's well, sometimes you just get a clean break, but this is, don't just be a little bit careful. Rather wait for the breakout and then a retest like you just get that clean. Obviously, we were taking this long. We were in a long position. That's where that 1 to 10 risk reward ratio came from on that little video. But this is the pullback retest. Beautiful. Oh yeah, that's what I was going to say. In the session, well, one of the sessions, I've mentioned it twice, I think. So this is going to be the third time. You only like the 3 plays, like really high probability plays. The first one is a breakout and a retest. They just like really, this is a breakout and a retest. Breakout, retest, weekly time frame, resistance, the breakout, retest. So breakout and retest is a beautiful play. The second one is a bounce off support in an uptrend, or a bounce off resistance in a downtrend. Right? That's the second play. And the third play is a third touch of a diagonal line. Remember gold? So that was the third touch. That was the third touch, not the fourth touch. You can see you'll see this happening a lot. The third touch is that's where the probability is, not the fourth touch, or the fifth touch or anything like that. Okay. So so those three plays, if you just have those three plays, you'll do well. You'll do well. Okay. Now you just if you know how to identify those levels, then you just need to focus on your entry criteria. What does it look like? What does the chart need to look like before you actually take the trade, right? And that's really it. Obviously, there's a lot more to trading, and we all trade different, and there are so many coaches on here. You can learn so much from all of them. But from me, that's what you can get from me. Okay, those three plays. All right, so that's the pound US dollar. Clearly, still very bullish on that one. And then we can go over to gold, which I just briefly showed you. Now, gold is breaking now. Okay, we broke this. Let me just delete all these other lines. Okay, I'll just delete those. So on gold, we broke this diagonal line, and we broke that latest lower high. Okay, so I think gold can potentially go up a little bit higher, but this is not a good place for me to enter. And the reason for that is basically, even though you are breaking this resistance level and you already broke this diagonal line, I don't like this. I don't like this, right? Oh my goodness, come on, work with me here. Like a steep angle, steep rally, it has to come down. When you see that, you need to just be careful, okay? Because this it always, I say always, but the probability is very, very high for it to correct. Okay, just pay attention to this rally. If you see this rally, even though you are breaking this and that, just wait for a pullback rather. Okay, so that's what I'm going to wait for. So I either want to see this rallying further up and then retesting it, or maybe just pull back here, and then I'll identify the levels accordingly. But right now, I'm not interested in gold. I would like to just see, the two scenarios, one of the two scenarios, as I just mentioned. Right. So that's gold, and the NASDAQ has done pretty much if you look at the price action here. Obviously, we had that strong rejection. That was based off news, and Igor will definitely be able to tell you a lot more about that. But if you look at the price action where we are now, we are pretty much exactly where we were 3 weeks ago. Is that 3 weeks ago? Let's count them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay. 2 weeks and 2 days ago. We're pretty much still there. Now, I'm still expecting, this is basically what I showed on Friday, that this was the original line I had on the chart, that this could fall short and then give you that divergence in price. So that's still on the cards. Obviously, the highest just shifted, but I don't trade these things. I don't trade these things. It's just it's a scenario, two scenarios. It's either going to go to the previous high, scenario one, or it's going to come back here to that support level. And if it does come to that support level, that will mark this as the divergence in price. So in other words, a lower high. Okay, so there's just two scenarios that can potentially play out. But you don't act on that. Okay, you're waiting for one of those two things to actually happen. So do what you want to do. Go there or go there, and then I'll start to focus on price action, but not right now. And then the Bitcoin, which is this is Paul's baby, or Paul's boss of his other babies. We spoke on Friday about how it would be great if we can get price, because it broke that neckline, to just come back up to that neckline and then look at price action for a potential short. But it looks like we kind of pretty much exactly where we were on Friday. Nothing, look, we're basically exactly where we were. I mean, it moved a little bit higher over the weekend, even though the candles are not yet, the weekend candles are not added to this chart, which is not ideal, but so maybe it did go there. I don't know. Did it? Did it, Paul?
I can't quite see on your chart. What level are you talking about?
Yeah, look, the weekend candles are not added to on this particular, on the Hola Prime MT405. So I don't know what happened over the weekend, but I didn't watch it anyway. But anyway, so this level, if it did go to that resistance level, that would have been a nice opportunity to go short, but it doesn't look like it went there. It'd be pretty much just where we were on Friday. So I do think like Bitcoin's going to go lower still. But where exactly, I think this 98 level makes sense to me. And then maybe just like see how price behaves there. It could pull a lot lower. We've identified those FIP levels, but I think the 98 level will be a good level. It's that's a pretty strong support level. But then again, it's just going to be all about price action. Do you get a pattern or some sort of engulfing, or what I like to see usually is like those impulse moves, right? Like an impulse move is when you have it's one candle that, or one or two candles. It's not always necessarily just one, but there's one or two candles that takes out the previous 6, 7, 8 candles. It's like you just see it like, and that's how I look for. That's where the buyers are potentially are. So something like that at this level, on a smaller time frame, maybe the 1 hour, even smaller, the half an hour. If I can get something like that, then I'll just wait for a pullback. You can trade the diversions, or you can wait, if you want to play it safe, you can wait for it to break the neckline and then trade it back to the upside. Or if there are no patterns, you can look at the 1 hour or the 4 hour time frame, looking for an engulfing candle. So engulfing candles are also really good reversal candles, but only at key levels, not at random places. Okay, they don't really. They kind of like if you had a strong uptrend and there's an engulfing candle in the middle of nowhere, then it's of little significance. Okay, it has to be at a key level. So, hi Lola, nice to see you. I love your dedication and your consistency. Yeah. Okay. So those are the 4 markets for now. So I'll just hand over to you, Igor, please, if you don't mind.
Okay. Thank you, Jannie. So let me start from beginning to show my trades, and then I will start to elaborate all these things for last 2 days. So this is the platform and my trades that I'm managing last few days. I hope that you see right now on the chart. Yes. So there, as you can see, I created a couple of trades. First trade that I have, I will just go here just to see is position that I made. I think in Thursday, if I remember. And in that moment, I reached the level 1.348 for British pound dollar. And I just hold that trade with a stop loss 1.344. And of course, today, when I saw how price went more than 50, 80, 90, 100 pips up, I moved my stop loss to the break even, but my break even right now is really 70 pips from the right now price. And I think that I'm very good protected there. Then the next thing, what I did, I was looking for a low during the Fridays. So in Friday, it was the choppy day, but later I will show you on the chart details. But what I figure out, I found 2 levels, and I find a triangle pattern, and price oscillate up, down, whole day. just play around. And what I did, I tried to catch the low because I wanted to be overall on a buy position with very tight stop loss. And I completed that trade at level 1.346. And right now I'm more than 90 pips in profit. And just 15 minutes ago, I created one sell order. And that sell order is for British pound dollar. Because I realized that we're more than 100 pips in profit. There is one important level for US dollar index. And I think that today we will not see the new highs. However, this trade is really, really tight stop loss, just about 1.356. So it's 1.3565. So actually, I don't mean nothing if I lose this trade. This is just a trade, a hedging trade, where I think that during the next, I think less than 24 hours, we will try to reach the 50% of retracement, and we will maybe go down there. Just to test the previous resistance and then to go up again. So this is some scenario in my head. So these trades I manage right now and watch on the chart. Okay. So let I show you some things related to the first. I can start from the economic news. Economic news, just to find the chart here, but I think that there's nothing special here, but just to share a little bit. So related to the economic news, today we only had manufacturing PMI. So this was the only thing that I watched. Actually, PMI stands for Purchasing Managers Index. It's a key economic indicator, and this indicator shows a health of manufacturing sector. So PMI above 50 means manufacturing sector is growing. PMI below 50 means is contracting. So as you can see, we got results of 48.5, which are bad news for a U.S. economy. Nothing special. It's a small adjustment. It's a slightly worse than month before. But however, that push British pound dollar and euro dollar a little bit higher and the US dollar a little bit lower. And this is the only something that usually if push the market, it's up to 1 hour, and then price will go in the direction when the traders want that to go. So there's nothing special there. What is interesting here related to this trade today? I will show you on the charts. So I will show you the whole story here. I hope that you will understand what was my plan in the last few days. First, I will go to the 30-minute chart, and I will show you first trend line, something like this, but this trend line is going far away. So the chart that I'm looking is 30-minute chart, but the movements you can see on 4-hour chart too. And this is the good things when we use a relative strength is in the past when you write a trend line. And this was the trend line on the something about. So the whole Friday we were so predictable, and every single time when we touch this trend line, it's around 5 pips lower than the last time. And we finished the Friday session somewhere on the low at 1.345, which was I was hunting to enter in that price level. And why I did that? Because after analysis for last 1 month, I figure out that every single Monday morning in Asia session, is pretty volatile. And because I'm sleeping then, and usually I cannot trade this in early morning, I realize if I have a bias which is bullish and I enter really, really low price, I don't have nothing to lose. And this is why I entered that trade. And what's happened in the morning, when I wake up, I monitor my several accounts, and all single account, I was more than 50 pips in profit. And for me, it's a beautiful morning. It's a beautiful morning when I see something
Yeah,
like
for
that.
sure.
And then it's easy to manage the trades and the stop loss. Everything seems easy in that moment. However, what I spot too, and I will show you that, believe or not, in the chart I will just open right now. There is a blue line on this chart, and this is the level you have as one of the strong support. And this level, if we go, for example, on the 15-minute chart, for example, you can see, for example, we tried on the May 26. We tried today multiple times. For example, today we already 1, 2, 3 times tried and test this level, and this is the very interesting right now. But we are holding above this level, and this is something that gives me a strength that maybe in next few hours, maybe we will not reach new highs, maybe we will start some kind of retrace. Even now I will just check the volume, because I didn't show nothing related to the volume right now for the British pound. Okay, if we go to the volume profiles or any volume here, I just need to I will just change the indicator here just to I will take
Does that say Igor?
maybe this indicator, just to check what's happened here. What? Yeah, yes. I modified some indicator which exists in the trading view, but some little thing. I just yes. This is I think it's really not so strong support here. Yeah, this is the very weak support here. So I think that we can see a push downside for the British pound dollar, and that push will be around level 1.3505. So around a 50% Fibonacci retracement. This level here, which you see right now, is it looks like resistance, like support, but the problem is that the volume is so low in futures, so low. Just to give you example, this support here has volume of 3,000. This support here is 361, 10 times less. And usually when we have that kind of pass that very easily, when we start to go from the up to the down, but this support at 1.345 will hold. So I think that we can create a 50% Fibonacci retracement at least for today push based on this. However, like I said, British pound, I'm watching. The second currency, the currency pair that I'm watching is euro dollar. The euro dollar is in the same shape like British pound dollar, very bullish. During the euro session, the high for the euro session after the news, and now we are retesting that previous level, break this level, then I think that and euro dollar and British pound dollar will start to go a little bit down and make some kind of correction, so we can buy maybe tomorrow at a better price. So this is, of course, just one of the scenarios that I'm watching. So what I watch too, I watch gold. I wanted to enter one level, but it was the level, I think, early in the morning. Yes, it was the earlier in the morning. I missed this buy opportunity here, and of course, maybe it's not smart to enter in a buy order for the gold, because I was already had 2 buy trades against US dollar. But this price level was very beautiful, and I think it was during the Frankfurt time, and nice can be a very nice trade. So on the, and maybe it's good that I missed, because it's dangerous when you try to put all eggs in one basket. So so and this is the things that I watch the whole day. Of course, related to the news, I just want to say something. Donald Trump, he started not just kill the stocks like Apple or other stocks with his news, to attack a euro and the euro dollar. Actually, he's putting the tweets related to 50% tariffs. First, he started in Friday. Before that, some tweet, and the market fell, I think 30 pips in just a few minutes. Then this weekend, he made a tweet about steel and aluminium import from the European Union. The tariff will be at least 50%. And all that news so impact the market, stocks price, and a little bit euro in some moments. But the good thing that I just realized is that I think there's a lot of institutional smart traders that maybe 50 minutes, maybe half hour, but after that, neither euro dollar, neither British pound dollar, nothing fell more because of the tweet, because they know this is the game, this is the play, this is the show. And I think fundamentally that kind of news shouldn't impact the market too much. However, like I said, we need to, of course, to monitor and tweets from Donald Trump. What I figure out, I didn't share with you. What I figure out, he's waiting few minutes before the stock tweets, just before that he can impact on the stock market. I think this is the cruel thing, really cruel thing. And I don't know, but this is something that really angry. I will use a polite word, but they're really angry because all that stuff, because you cannot manage your trades, you cannot manage anything if you have so crazy spikes. And I don't know. So this is something that I think now it's more important than fundamental news that we have, for instance, and etc. These tweets are really dangerous. But like I said, I monitor that and try only just to recognize, is this a fundamental news? Just to tell that British pound dollar right now is pushing a little bit lower, which is good. And I think that we can see maybe, like I will just repeat, that maybe we can see 1.3505. And I think very close to that level is simple moving average 15 1-hour chart. And I think somewhere there will be that zone, some between that levels will be that zone when I expect that support, a nice level to buy British pound dollar again. So, and close my hedging trade. But I hope that that will not be so big a pullback. I hope it will be in that kind of the zone. So just to see, are there any questions here? Igor, can British pound dollar make a double top to fall or a new top? British pound dollar can always make a double top and fall or make a new top. It's everything because it's so volatile and etc. But like I said, right now, my highest probability scenario is that to the end of this day, we will go some kind of correction because we already made more than 100 pips in profit for British pound dollar, measuring from the opening Asia Open. And I hope that price will make some kind of retracement. I don't know which level, maybe 50%, maybe 61.8, maybe, I don't know. But I think we will not see, I will not see some big new highs today. But everything can change. Everything can change. Of course, market is very hard to predict, but I would like little drop to see. Only that. There are more questions. Do you have some remarks, guys, related to my British pound dollar trade?
Yeah, it was beautiful. It was beautiful.
I mean, I think you're obviously right about what's the challenges of trying to keep up with the I'll be diplomatic. The slightly difficult to make sense of tweets and positions, and so I was saying this today in a video just recording. So we've obviously had for sustained movement, say in crypto as an example, you need to have like consistent calm markets for a few weeks. We've had that and we've saw some good trading, but now of course we're kind of back to square one. It feels a little bit so. It is important to mention because it is obviously impacting everything. So yeah, I agree with you on that.
I mean, but we spoke a bit about this quite a few times, right? This is what we can expect for some time. Like this we are in this war. It's not just going to go away. So it is. It has been for some time, and this will continue. It's going to be a breaking news kind of market, right? This is like this breaking news, and then all of a sudden things just start to move, and it's like, what just happened now? I think there's a website or something where you can get that breaking news as part of your normal economic news calendar. Are you aware of that, Igor?
Yes. First, on TradingView, we sometimes get very good news and real-time news. But I know that a lot of platforms, I know that there is a platform that I use sometimes. TrendSpider, for example, they have some special drops and some special sentiment, and watch that news for every single asset, and it's very good visually. You can watch that and use. But I figure out that sometimes when you have so many data, fundamentals, price levels, all these things, you're losing the edge, and my head is bubbling, and so I try sometimes to keep a simple, just to monitor either the high impact news, either now Donald Trump, and nothing more. So I'm trying to make bigger simplicity in my trading. So it's a little bit hard. So
yeah,
and just to add to Andrew, just to know, just to say about this trade related to the hedging, this trick is I took from Jannie, because we have a average true range, daily average range was more than 100 pips today, and we already 100% use that daily average range on Mondays, and this is why I entered short British pound dollar, because I think that there is a smaller probability that we will get new highs. But Of course, we always can get some kind of extension, but I think that today maybe 80% I'm sure that we will not get new highs.
Yeah, I agree with that. For today, definitely that the move for today is over. That's definitely the case. I fully agree with you on that one. James, nice to see you, man.
I hope.
And Andre, of course. I haven't even greeted you. Hello, Andre.
I hope.
And that's the only market you're going to look at, right? You're not going to. Do you have your kind of sniper scope on the dollar yen, or is that not something you're watching right now?
Yes, I watch dollar yen, but it's a little bit so tricky because it was so strong in one moment and now start to be weak, and US dollar is weak. And when I see that weak, I don't like that. So it will be interesting for me maybe to enter again into sell order.
Okay. Great. Do you have anything else to share for?
But I want a better price.
You want a better price, yeah. That's how it works. All right, Igor. If you don't have anything else to show for right now, probably give Paul the honors.
Igor,
take us through the very exciting
world something from Paul
alt
crypto. Yes.
All right, let's have a look. It's pretty straightforward today, to be honest. Let's have a look. Okay, so obviously, big picture, having a breakdown, perfectly natural, all good. This is the essential next line in the sand. This is the next support area. This is the range. This is basic stuff, about 102 to 100K right at the bottom. So, that's great. We've got the moving average coming up. So, this is the kind of area you want to see potentially a bounce from. But this ideal retracement zone is fast kind of moving upwards a little bit, because as the moving averages come up, the ideal retracement zone comes up with them. And now we're kind of quite flush with the 100K. But let's just have a look at the, just zoom in and see exactly what's happening. So obviously this is all-time highs. This is the retrace we've had, 30-minute chart. And we have, again, we've seen this sort of behavior all the time. We've had breaks to the upside out of this pattern, breaks right all the way through it and comes back in. And now we're kind of sitting in no man's land, which is extremely unhelpful to trade. So we do need some more structure here, because, I mean, this is just whipsaw nonsense, which is very difficult. The point of control is just below. So there is this whole range, this whole area here is pretty good in terms of volume, but these are the areas to look. This is 100K floor, just about here. And this is kind of the local support, and this is where we could be going. Obviously, this is ideal in terms of entrances for long positions, but you've got to keep an eye. You've got to keep an eye on this area. And if we've had a higher high, but a lot could happen. This is very difficult to ascertain. So it is a waiting game. I'd encourage you to wait, because you could think, oh, I'm going to try and front run a position from here, but as you can see, this is kind of where we should see some kind of stopping. So just the psychology of what we're looking at. Let's just get into it. So sellers take control. Sellers take control here. The buyers essentially force back control and pushing the price action back up, but they can't get it to all-time highs. They can only eke out 110K. Then the sellers take back control, having seen that the buyers can't push it higher, and then the sellers are in control. But then as we approach this area, we start getting some buyers coming in, which has allowed us to do this. But then this is a battle at the moment with the sellers. So where's the line in the sand where the buyers fully take control? Well, it's in this area. So this is essentially what we're waiting for. And we've got this bullish bat pattern as well, which is quite, we don't see this very often. That's a lie. We'd see it quite often. We just don't call it a bat. And here, if this plays out, we want to see a break of this TP1. Now, if we get a break of this does invalidate any potential bearish signals we've got. And you might be thinking, hang on, Paul, you haven't mentioned the bearish signal yet. Well, here it is. It's another daily chart with this potential bull trap with a bearish retest of this upper support. Now, this line here happens at around 106, happens to coincide with the first TP1 of this bat pattern, which would obviously give us confirmation if we head above. So if this pattern can push us upwards from here, this will invalidate the potential bear trap bull trap idea, which would then obviously allow Bitcoin to continue on its way. So this at around 106, 107 is the line to watch for bullish continuation. And this at about 102, which is the floor from this move here, is essentially the line you want to watch for a bearish breakdown. Now, obviously, we've talked about the fact that there is some levels below here, but this is the way we're playing it with this particular pattern. And let's see what else we got. The possible hidden bullish divergence on the daily again is still in play. We've got quite a lot of instances of it. This is just one example on the RSI, and this is obviously dating back to May, so this isn't going to play out straight away. We could see another couple of candles before it plays out, but it could easily be invalidated as well. But that's in play as well, so that's a nice bullish signal. But altcoins, the altcoin market, very frustrating. I think people will be feeling this weekend as a lot of the setups we were looking at last week have invalidated. And let me kind of explain why. Obviously, you know, as Igor mentioned, we had some interesting trade war news at the end of last week, which hasn't helped things. But essentially, what I was looking for, so I was in a load of positions, a couple of positions around here, and we were waiting to see if this rolled over down here, which would be really good for altcoins. You'll notice that it's orange on the way up, Bitcoin season, green on the way down, good for altcoins. But I watched this happen in real time. We had a break above the previous swing high, and then in this exact moment, that's when the altcoins started to really sell off, as they realized that we're not going to get a continuation all the way back down to here just yet. And therefore, a lot of the altcoins, not all of them, a lot of them have started to reset quite badly, whereas some are still maintaining a bullish posture, but not for much longer. So very frustrating. And again, sorry, altcoin fans, but this is also a problem. This is total 3 versus Bitcoin. And obviously when this is going down, that means the altcoin market is not doing well compared to Bitcoin, and Bitcoin is outpacing it. Now, this is the worrying thing, because Bitcoin is still outpacing the altcoin market even when it's going down, which is a problem.
Oh my God.
Right? And it shows the altcoin market is really pegged to Bitcoin. So we've broken below this descending kind of triangle pattern, which isn't great at all, as we were hoping for a breakout in this direction. Watch for the SR flip. So the altcoins, again, have got a lot of work to do. But if you're looking for a signal, maybe at the end of the week, to enter some altcoin longs again, obviously you're looking at Bitcoin. You want some more structure, and you want to see a more solid floor. But also you need to see this come back into the pattern for a potential bullish confirmation in terms of the money flow. You're not going to wait for a breakout of the pattern, because that'll be well into the summer, of course. And you can obviously zoom in, but we need to regain this level. This is not particularly good. And obviously, if we just zoom out, just show you the big picture. I mean, look, we could be coming down here, and that would not be good at all for altcoins. So we were hoping for a bounce here and a move upwards from here, but not quite happening. And if we just check in with the actual just total 3, not compared to Bitcoin. So this is just reflective of the altcoins market cap. You can see we're starting to lose the bullish posture, whereas Bitcoin hasn't, and we're now coming down and probably back to here, which would represent a reset, which we've been trying to avoid. And of course, it was all of this news which has added to the problems at the end of this week. And as Jannie said, unfortunately, this is the reality we're living in at the moment, and this is the consequence of it. So yeah, Bitcoin's fine. Nice pullback from Bitcoin. But in terms of the rest of the market, got a little bit wrecked over the weekend, as did I, with a couple of stop loss hits. So I'm not particularly happy. But nonetheless, this is a lovely bat pattern, which we can enjoy throughout the week to see how this
some bat meat. Yeah. I just a quick question there. You've mentioned that this is the 1 hour time frame. You have mentioned that Bitcoin was pushing higher, and it just couldn't quite break that the highest point, and you know, as a result, you got that lower high. Would you, because I know this is very different, but would you draw a diagonal line and look for a third touch, a potential, just to see how it behaves at that level, if it's finding resistance there, or is that not really part of this play?
Give me a bit more info about the diagonal line. Where do you want it?
From the high to the lower high, and you just extend it. Yeah, you just extend it. Yeah, so that could potentially be a resistance area, right?
Yeah. I mean, probably a third touch is required to make it significant, right? But obviously by that time it's already got in the way. So yeah, potentially I wouldn't be too worried about that just yet. I think if we're messing around, if we're hanging around here for a while, then yeah, we're going to see patterns, and especially if this forms, say, a channel of some sort. So I mean, I don't know what that might look like, but maybe something like this. Then yeah, sure. But its relevancy, not 100% sure just yet. But we do need to be aware of it. It could form the upper trend line of a channel of sorts, which would be great line in the sand to trade off potentially. But yeah, that's good catch. We'll see how that works out. But yeah, but if this pattern plays out, I mean, we're coming up to about 118. But again, this is, we need confirmation. We need to come above here. This is just something to look at until we get confirmation of the first move above here. But also, as we said, this is quite significant because this would invalidate one of the only kind of bearish signals we've got at the moment that I can see. So this is probably the chart to be paying attention to, the one out at the moment. But yeah, I think we'll keep you updated. We just need a bit more. We need a bit more because if you switch onto the 30-minute, it's a bit of a mess, right? It's not really helping anything, and I think we'll probably we could probably get rid of this pattern in a day, maybe, because I think it is being respected, but it's about as helpful as a chocolate teapot. So why is it there?
That sounds delicious. But anyway, carry on.
It doesn't until it melts on your table. But I mean, maybe there's a channel. Maybe let's have a look at this slightly differently. It's always important to just revisit patterns, because if there's a bit of ambiguity, I mean, that's not great either. And this is obviously the confusion which comes. There's a channel of sorts, but again, when it's not really clear, is it? Not really particularly. So again, hence why I said we need a bit more structure. But let's just leave that triangle off for now, and let's just leave the price action naked to see what it does. But yeah.
Yeah, I think you're right, because. Sorry, carry on.
Sorry, carry on, Jannie. Sorry.
No, I was just going to say you are right. When price action looks like this and it's not clear, you just leave it and let new candles get added to the chart, and it will get to a point where it's a lot more obvious and clear. So that's not what we're having right now. So you're right when you say just stand back and let the picture kind of reveal itself.
Yeah.
James, you have a question there. I trade from S, and I think you mean support resistance, or from high and lows. Do you have entering rules, or what do you want to always see before pulling the sell or buy trigger? Yeah, that's a good question. What I do is I identify the levels on longer time frames, right? So let me just show. I'll show you the gold trade, for example. All right, because there were 2 gold trades. Actually, I took 3 last month. So I'll just show you that one. Maybe 2 of them, whatever. Okay. And so there's always there's a process. So the first step, as you've already pointed out, is I like to wait for price to go to a significant level, either support or resistance, okay, or high or lows, which is the same thing, okay. When price goes back to a high, it's a resistance, or back to a low, it's a support level. So support, resistance, basically. And this is the gold trade, okay? So the first step is to identify the level, and it's going to be on the daily time frame, sometimes the weekly, very rarely on the monthly, okay? But they do happen. It's just like when you get one new candle added to the chart, then obviously it's going to take a long time for you to get to that resistance or support level. So on the daily, the smallest time frame I would go to is the 4-hour to identify these levels. Okay, so in this case, it's the daily. You see that little pivot there? There's a video on this on the Hola Prime channel as well. But that is the pivot. When it breaks through there, this becomes support, okay? Because it was resistance, but it didn't find resistance there. It just broke straight through. So that becomes the most significant support level. So you identify that level. What about over here? What about when you are trading over here? Well, it's basically exactly like the chart that Paul just showed, or not exactly the same, but the same kind of situation. It's like, it's very difficult. As soon as you catch yourself using that language, then you know you're not in a good setup, or the probability for one thing to happen over another, it's not clear. All right. So that's basically what happened over here while price was trading here. So you just stay away. You have this one level. Obviously, you can look at multiple markets, but for this particular market, that was the level I identified. Now, once you get close to that level, I'll go to smaller time frames, and then you look for patterns. Okay, so that can be it's typically a double bottom, right? Sometimes a head and shoulders formation, but you'll probably get more double bottoms or double tops than head and shoulders formations, or also the engulfing candle. Okay, and there's a fourth one, and that is divergence in price. But divergence in price, if you look for divergence in price, it has to be based off an impulse move, and the impulse move is again when I think this was actually an impulse move. So let me go to the 15-minute time frame here quickly, and then I'll just quickly show you. Yeah, right here. So you see, this is where close to this level, this is when you start to pay attention to price action. Okay, you can see we just bounced up there. Would you take a long there on the 15-minute? No. Okay, is that an engulfing candle? Oh, where did it go? Okay, I'm trying to zoom in here without it disappearing, and it doesn't seem possible. Okay, let me just zoom out. Is that an engulfing candle? Yes, it is. Okay, if you look at that bearish candle and you look, I'm talking about the body of the candle specifically, and also the close above. Now, why wouldn't I take a long here? Because it's the 15-minute time frame. Engulfing candles, if that's the reason for the entry, you can't go smaller than the 1 hour time frame. It has to be on the 1 hour or the 4 hour time frame. If you go smaller than that, you need to get patterns, right? So here there were no patterns. Okay, we were just trading to the side. Now remember, the level was the daily support level. Then we broke through here. So we broke through support on the daily time frame. Oh, the support that was identified on the daily. Here's your impulse move. That's what it looks like, right? You see these two candles here. That bullish candle, that bullish candle. It took out 1, 2, 3, 4, 5, 6, 7, 8, 9. You can about 9 bearish, 9 candles. Some of them were bullish. But do you see what I mean? So that is what it looks like. It's just like this is now on the smaller time frames. You can see it on the longer time frames as well. But if you see that, then you want price to pull back, okay? And then you want to see price pushing back up in the same direction. So you never trade that impulse move. Okay, you want it to pull back and then push up back to the upside. But sometimes you will get that higher low. Other times it will come right back to that support level. If you get that, you wait for a bullish candle, so it's pushing back to the upside. And then when this candle closes, the new candle needs to break the previous candle's high. That's the final entry criteria. Okay, so you can play it a little bit safer. You can wait for this neckline to break, and then you've got that double bottom, and then you can just take that long. Okay, this was a 1-to-11 risk reward ratio trade. I didn't wait for the neckline. I just waited for this this pullback and then this divergence in price. Okay, now when can you trade the divergence in price, and when do you have to wait for the double bottom? If you don't get the impulse move, if this was just gradually trading up in the same kind of fashion, or in other words, the same kind of ATR as the other candles, right, then you don't trade any divergence. You want to wait for that confirmation of the double bottom. Okay, but if you get that really strong impulse there, then you can trade the divergence. Okay, because the buyers are right here. That's where they are. And then you just trade that divergence. It's a very long answer, but hopefully that answers your question. But that's how I approach all the trades. But it's key levels, and then from there you just go lower to lower time frames, and then you look for something that makes sense. Okay, like a setup, like almost independent of the fact that you are trading at the support level, even though that's where you start. Right? You have to trade at a key level. That's just where the money is. It's more likely to move give you a really nice move when you trade off that level. Another example is let's stick to this this daily, because there was another this daily support level, because there was another entry. That one I got, and then the second one was when we retraced right back to the daily support level, and here you get, what do you get here? That's a beautiful engulfing candle coming right off the daily support level. You see, that is the engulfing candle has to be on the 1 hour or the 4 hour time frame, nothing smaller. So here you don't have to look for patterns. You can just I did look for patterns on the smaller time frames. There was nothing, but in this particular case, there was an engulfing candle on the 1 hour time frame, and I wrote this all the way up to close the gap over here. So that was also a beautiful trade. And then the third trade was the short coming off that diagonal line. Okay, so that was not a big trade. That was like a 1 to 3, but it's still pretty decent. Okay? So that's how I approach it. I hope that answers your question, James. But the more examples you see, the more clear everything will become. Andre is asking Igor a question. Is there any possible reversal point for the pound US dollar? I see a region between 1.375 and 1.385. So Igor, over to you, please. Thank
you. I would just share how we can check that. The only way how we can check that. So I will go to the British pound dollar futures, and I will go to the weekly chart like this, and I will add a delta flow profile here. And what I will do a very large period. For example, more than 300 the last 6 years to get the same levels that we have right now. And if we go here, you can see the average 1 million, quarter million, etc. And we have one low volume profile, as you said in your message, around 1.3715 level. And in that area, maybe we
Oh, Igor, your internet is
bigger pullback.
It's playing tricks on you.
Have a strong rejection there. Yes, please.
No, I'm just saying your internet is playing up.
We will have either the strong rejection on that level. Okay, there's a problem. I can later again exit and enter again. But meanwhile, I just want to say that there is a chance that either we will have a strong rejection there, or we will very strong, very fast there and go to the next level. So we cannot know that. It's very hard to predict that. But for now, we know that we have two important levels. One is 1.362. The other is 1.3715. And then on the 3.8 level, we have very strong price. Which way will price go from one to another? This is always the tricky part. But the good thing is, what we can do, we can just make some projection, make some scenario in our heads, find some kind of the bias and try to reach from one moment for that. So this is the only we can do. And the strategy, for example, is interesting here is that, for example, right now we have Fibonacci retracement. And we have a level.
I hope you're making notes, Andre.
One of the 50% natural retracement is 1.3505 level. But as you can see right now, it is trend lines. You can figure out that on this level will be around 40 relative strength index level, which is usually strong support for the euro dollar and British pound dollar. So everything is overlapped. Everything perfect level. So the good thing is, according to your question, if you think that it will be a strong reversal, very strong reversal on some price level, there are two things you should see on the chart. First, it should be a fresh high. So if you reach 1.3715 and it's a new high, it's not previous high from the yesterday or last 7 days, it's a new fresh high, and you see a strong rejection, like a V shape in the to maybe here, but it's rare. You can find 1 or 2 chances during the 1 month that you can have that beautiful V shape on the highest high or lowest low. Usually we need to wait some retracement, some movement to enter into the trade, but maybe you will have a right moment to enter into trade. So we will see. We will see anyhow. So I wish you luck. You're welcome.
Yeah,
James.
well, I think just to add to what you said there, Igor, is there any possible reversal point for the pound US? I see. Yeah, that's the question. Can it reverse from that point? Yeah, it can definitely pull back, but you get there's such a beautiful. If you don't mind, I'll just quickly show you. I've opened trading.
Yes, please. Yes,
trading
please.
view. So if you look here. So this is the weekly time frame on the pound US dollar. You see this beautiful V shape here. Now this is the weekly. Now we looked at the daily before. Now if you look at the daily, and we've also mentioned that this is not exactly a pattern we trade. Let me just delete these lines quickly. You'll see that I just need to get this right. Yeah. So we spoke about that cup with handle pattern, yeah. Right. This is your handle. This is not the pattern we based the trade off. It was just like, oh look, you also get that. You know, it was like a probability stacker. Okay, so there's your cup. There's your really nice tight candle, your handle. And then a breakout to the upside. But the question was the 1.375 level. Yeah, I know exactly where you got that from. That's basically based off this pivot here, right? Let me just, yeah. Where's the horizontal, not ray, horizontal line? There. That's 1.375, right?
Yes.
Yeah. So, and then the next one was 1.385. 1.385 it will be one of those pivots as well. So 3.85, I guess it's this one, yeah. 1.38. Where did you get 1.385? 385. Well, Andre, you probably had a few beers when you were drawing that line, but it's actually 1.374. 5.8. It's close enough. Yeah, I think that's where you got your levels from, right? Yeah. So can we get a pullback? You can, of course, but it's going to be just this is the weekly time frame. You're just going to have to pay attention to price action. But if you are if you entered the trade, here at the bottom, you're not going to worry about the pullback here. You just look at the ATR. I'm not sure exactly if you're more of a are you a swing trader, or do you prefer to get out before the end of the day, or it depends on those kind of things as well. But the pound US dollar is going to go, or at least has a very high probability to go to 1.425 ultimately, especially with This is the weekly time frame. So, if you just look at how long it took from once we hit the resistance level to get to where we are now, it took 1, 2, 3, 4, 5. This is week number 6 to move that distance. So how long is that going to be? 3, 4, 5 months? I have no idea. Okay. This is the weekly time frame. So it could take some time, but yeah, like you can, but to answer your question, is there a possible reversal point? Yes. Yes, that's definitely possible. DXY lost 10% this year. What is the analysis going forward? My crystal ball came back today. So let's see. It's been calibrated. It lost 10% this year. What's the analysis going forward? It's going to drop. It's going to drop even further. Okay, just based on the fact that, this again, the weekly time frame. It's a very good time frame to get a much clearer picture in terms of what to expect over the longer term. So this is the support level. You'll remember when we had this very strong hammer formation coming right back to the support level, and then we had that pullback, and then we broke below and closed below that support level. And then the week after that, I mean, I'm just talking you through things you can clearly see on the chart. We had that very strong reversal, and then again closing below that support level. And this is now Monday, and we just are pushing lower. This bullish candle, this hammer, is going to get taken out. The probability for this to get taken out is very high. When? I don't know when, right? It can still push up and, do that and form a doji, and the next candle could push up a little bit. And you see what I mean? I'm not saying it's going to go in a straight line. It's just like where you identify levels where this can potentially go. But this is going to go much, much lower. This is going to go much, much lower.
I agree.
I want on the monthly, you see, we could, if I look at this, this could go, and this is a bold claim, so don't kind of, bet your money on it or anything. We could see this low, this 89 level, 89.5.
Yeah.
Definitely not impossible. We could definitely see that level. Yeah. But this is the monthly time frame. So, this strong rally here is like, well, how many months is this? 2, 3, 4, 5, 10, 11, 12, 13,
yes.
14, 15,
just
16,
to add
17,
this,
year and a half. Sorry.
Just to add, Jannie, this level that you showed right now, it's a Howard level for the US dollar. So his Elliott wave analysis and these monthly lows is around there, around 89 level. So very, very strong monthly level for US dollar.
Yeah, Andre, you said I think it fell very quickly. Yes, it did, right? But the reasons are obviously because of the tariff thing and all that. Okay, that obviously had a massive impact on all of this. But it's where are we? Like, we're in June. I think it's going to continue to go lower for the rest of the year. Right, not necessarily without any pullbacks, but see, for example, this strong rally here, it wasn't just like bullish candle after bullish candle. You did get some pullbacks. You see that like a doji candle month almost, and there was a bit of a pullback there, and that was a bearish month there. But overall, a very strong push to the upside. That's what I'm trying to say. Yeah, I'm not saying it's going to just move in a straight line, but the question was, what is the analysis going forward? It's going to move much lower. The probability for it to move much lower is really, really high. So I enjoyed
when you said don't bet your money on it. And obviously we're not betting, but if we're going to trade it.
Yeah, not the dollar index. Well, yeah, the dollar index for me is an indicator and not necessarily something I trade. I like to look at it and get some sort of idea, and then when I look at the obviously the pound US dollar, then it needs to match. Like it needs to it agrees with each other. And then, like for example, like this when we were at this weekly bullish hammer candle that formed right on that support level, I was short pound US dollar. Right, I was looking for shorts, and there was an opportunity to go short because it was. I don't know if you can remember this. We had so many confluences on multiple time frames. We had this weekly resistance level. That was the weekly resistance. We had this head and shoulders formation. We had this diagonal line, and this is the trade that I took here, right there. No, that's the wrong line. Sorry about that. It was these candles were not there at the time. So this diagonal line, yeah. This is a trade that I took. There, you see. So off that diagonal line, and then there was a beautiful drop to the downside, and then we closed back above. Initially, we first rejected off that retest. That's why I entered a second trade, and then it started to move really nicely. But then we closed back above that resistance level, and that's when I got out of both trades. Okay? So I gave back some profits, but it was a profitable trade, and then stood back a bit, and you could see that we broke that diagonal line, and the picture just started to change, and then the bias also changed. But the point is, like this head and shoulders formation coming off a weekly resistance area was matching what the DXY was doing, right? Which is that hammer formation coming right off that support level. And then you combine that with what you see on the pound US dollar, head and shoulders coming off a weekly resistance. It looks bearish. This looks bullish. It's matching. So it's like an indicator that you use to increase the probability for your trades. But right now, that pullback is over. That pullback is over. We're going to go lower. So another long answer. Hope that answers your question, Andre. And any other questions, Andre? James? Robert? Robert is back to work. Lola? Lola, do you have any coins you'd like Paul to have a look at? I was going to ask you, Paul. Do you only take you only buy, right? You're not really much of a short kind of trader.
No, I am. Yeah, most of my trade successes have been shorts. I prefer trading bear markets, if I'm honest, because it's easy. We talked about this before. It's like there's 4 scenarios really for the money flow and Bitcoin to give altcoins a good movement. There's only one which is good, right? The rest are a little bit or really bad. So it's just easier to short, really. So no, I do a lot of shorting for sure. But obviously, when Bitcoin's touching all-time highs, I'm not going to be telling people to short anything, despite the challenges.
Yeah. It is a very difficult position where Bitcoin is right now, that's for sure. Yeah, and I was just curious because you do get, especially like, well, I don't know so much about the altcoin market, but definitely in like say like penny stocks, there are people they only short. That's all they do. They just take shorts because like they'll wait for even when there was like a big push to the upside, they'll trade the fade. They'll just take the short the short trade and never the long. So I was just curious if
you can spend we talk about this, you're sitting back on your chair, you're waiting for weeks on end for good conditions and Bitcoin to line up with the altcoin market, and then it's to have a couple of weeks of poor economic news, and then great, we'll have a week of good longs, which we did, but then we have a week like last week, which we're getting stopped out left, right, and center, and it's really difficult. So I mean, that's the game if you're longing in crypto, certainly at the moment. I mean, and you think about it, even when the market takes off, we have we have an altcoin season, an incredible altcoin season, which made loads of people, including myself, money last cycle. That only lasts 4 or 5 months, right? What are you supposed to do for the other 3.5 years, right? Just sit there looking.
Hibernate.
This is the 99th red candle. This is going to be the one, right? No, you're going to destroy it. What's it?
Yeah, it is. Yeah, it's tricky for sure. Yeah, it's just the Bitcoin, but the Bitcoin is the leading one, as I've learned from you. Bitcoin is the one to watch, and then everything else follow. But yeah, Bitcoin is at a. It's not really. it's at that point where everybody would think it's going to just break. It's just going to continue higher, and then you get that struggle, and then that just reflects in the altcoin market, right?
Yeah, for sure. I mean, look, right now, the altcoins are just, they're moving on Bitcoin as it goes up, and then they're tanking on the slightest move going down. Again, that's where we are, and we were hoping we're going to get some, we're going to allow the altcoins to come up, but not fully reset, just to have their 30-40% retraced and continue on their way. And we've had a little bit of that, and some altcoins haven't fully reset, but we want them to depeg, essentially. We want them to be off doing their own thing and leaving Bitcoin in the dust, which is just not happening. And honestly, with everything which is going on, it's difficult to say if it will this cycle, which is, it doesn't mean, sure, we're going to have stop starts, we're going to have some good movement from certain tokens, but it's difficult to see what's happening right now. So again, not worried about Bitcoin, but the altcoins are where it's at, right? And if Bitcoin, because you're trading Bitcoin, great, Bitcoin did 3% today, awesome, still haven't paid my house off, right? I'm looking for altcoins. But if altcoins are just kind of, they're not moving properly or consistently because of inflation, whatever, right? It's very, very challenging. But
this is something you've pointed out. This is when Bitcoin was making new highs, right? And you pointed out the altcoin market. Did you have was that some sort of altcoin index or something? It just showed that this is not good for the altcoin market because Bitcoin is making all-time highs and it's just not reflecting in the altcoin market. So that's not good, right? Remember that?
Yeah. And that's and that's it. And if we hadn't had some bad news or some news which is difficult to interpret, let's just be diplomatic, at the end of last week, then Bitcoin would have made, Bitcoin maybe would have just made a move, but it's difficult because it's not just about the news, right? And this is how, as traders, we need to. Bitcoin wasn't in a good position, right, in terms of to continue upwards, right? It was within an upwards channel, narrowing channel, which obviously needs to come back down. And people are looking, there's a lot of people buying Bitcoin, so there's a massive safety net in terms of supply underneath it, for sure, right? But it still needs to come down. But then when it comes down, at that time, because of some bad news, then of course the altcoin market isn't going to be like, great, we're going to get our long entrance now. Once Bitcoin comes down a bit, they're like running for the hills because, again, tariffs, what's happening, what's going on. So it's as we talked about, it's very difficult to get, even under normal circumstances, to get everything lined up. A natural pullback from Bitcoin, which doesn't wreck the market. What do we need to see to do that? And right now, all the altcoins are doing is they will move a little bit with Bitcoin, but Bitcoin dominance is the key. If Bitcoin dominance is continuing upwards, it's Bitcoin season, and that's exactly what's happening. And when I was looking at the trades I was in, or looking to get in at the end of last week, I drew a line on Bitcoin dominance to see if it would do a new swing high, right? And I knew that if it did that and it broke above that, the altcoin market is going to get a little bit wrecked, right? And then that's exactly what happened, and I got stopped out just like that. I didn't even have a chance to get out. And that just shows the state of the market. So we may see Bitcoin being the headline thing, 150, 200K, sure, that's fine. It's a deflationary asset, but we're running out of time for the altcoins. We really are. So be very cautious this week, I think, with your trading. But yeah, maybe next week we'll be able to start again with some longs.
Yeah.
One question, Paul, related to the crypto market, if you don't mind. There is one question. If I go, for example, in TradingView, and I go, for example, in a crypto page, and I see the best gainers and losers in crypto market for that day, do you use some filters there? Using that filters not to watch some cryptos with a big gain or lose because that the market cap is so small or something. Do you have some filters for crypto markets that you use?
Well, it's all. I mean, the filters, I suppose, have to be on our brains, right? It's contextual. So I think if we are, if the market's hesitant, right, and you just see something popping, it's not going to change the fact that the market's hesitant. So, and I would look at it and I'll see what's going on. But the only reason why I would get interested is if it's a sign that altcoins are starting to break out of consolidation zones, right? And then I'll be like, oh, great. So these three tokens, maybe MAME or AI, which are leading the pack, they've made a breakout. So I'm going to look at this chart. I'm going to plan it all out because that's where the liquidity is. That's where the attention is. And then I'll look for the retest entries or anything like that, right? But you got to, it's all contextual. And likewise, right now, if I see some top movers, which I imagine won't be high percentages, maybe just 10%, 20%, right? You might see some altcoins. I'll look at that now and I'm like, well, I know that's nothing bullish. It's just a retest of a support level which was lost a few days ago. So therefore, I'm not interested in it, right? And obviously, you can go to like RSI Hunter and you can use all those filters to try and find stuff which are oversold or overbought to fit your fancy. But ultimately, you can find those tokens, but you need to be aware of what the context is. And therefore, right now, any movement is just a recovery movement as opposed to a big breakout, which is something I can trade. I mean, did that kind of answer your question, my friend?
Yes, I understand that. But what I sometimes I watch the crypto market as I watch the stock market, penny stocks, for example. And for example, I checked today, and I saw that the biggest crypto gain today was Hola with 250%. But in the same time, I saw that the volume was $500.
Yeah, exactly.
So I always need to have some, maybe threshold. So with this threshold, I don't watch it.
The volume. That's honestly the first time that you mean the market cap is $500.
I'll do some setups, right? And I'll look at them and like, oh, this is such a great setup. This setup is awesome. And then I'll look at the market cap and it's like $5. And I'm like, I can't even get in on this because if I get on in this, everyone's just going to literally take my money, right? I'll just pump the market and they'll take it. And you see that all the time. And you just go, that guy or girl didn't check the market cap before trading, right?
That's actually a very interesting point. So, like, do you have like is there a minimum market cap that you would like to see before you pay attention to any coins, or do you have some sort of filter for that, or how do you?
I mean, 10 million. I think
10 million.
Probably,
yeah.
I mean,
10 million.
Yeah. I mean, the thing is, you can't. I mean, you can trade them, but you'll be trading with such a small amount of capital. It's not really worth it. And the problem is when you obviously low caps can put in great gains, but the benefit of uber low caps, it kind of trails off because you just can't get a significant portion of capital on there. Not even your usual reduced kind of capital is still too much for those trades, and therefore, what's the point? It's so high risk. You can't really make any money because you can't get more than a few $100s on there. And even when you do, you're sitting at the exchange half the time, trying to just twiddling your thumbs, waiting to get your order filled, hoping that someone will come along with $50 just to let you enter the market, right? Who's got time for that?
And also, you can't get out. You'll never be able to get out.
You'll never get out. You'll be like, oh, I'm in profit. This is fantastic. But you just can't get out because the liquidity is not there and the volume. And there's ways to play it. And we've talked about this before, that new token launches, tracking whale movements to see where those pumps come. There is a strategy there for sure. It's just it takes a lot more time, a lot more research, and I prefer to stay away from it. But yeah, definitely check what you're trading for sure. And that one you would have seen, Igor, would have definitely been in that category, right? That 200%.
$500. Oh my word! I didn't even know there were markets trading with a $500.
Well, you got to bear in mind that obviously that market cap is spread across multiple exchanges, centralized or otherwise. So unless you've got your fingers in all those pots, you've only got access to whatever supply is available on that exchange, right? So it's even more reduced as a result, because if you've got a market cap of like 1 million, that's spread, and not all those supplies available. Yeah. So that's the issue.
Yeah. And then once you get that right, then you still need to focus on the price action. And then, it doesn't get easier. It actually gets more difficult. Yeah. But you know, at the same time, I mean, Paul, it wasn't long ago. Like, was it not two? I mentioned this on Friday. It was 2 weeks ago, maybe 3 weeks now. That there were 5 altcoin picks and they all worked out beautifully. And that's because Bitcoin was just very convincingly and clearly move in one direction. But that's not always going to look like that. Bitcoin is not very clearly and convincingly moving in one direction. It's like struggling at that high. So, and that obviously spills over to the altcoin market. So, hopefully it will just get away from that level in the next week or two, so that we can either get that pullback or just break out to a new high, so that we can, or not me personally, but definitely for you, Paul, and everybody watching trading altcoins. So you can get some clearer setups with a high probability of it actually working out.
It is a challenge because, especially because YouTube space is very hype driven. So people are used to seeing faces just saying, "This is a good setup. This is a good setup," but I'm always looking for ways to kind of distill that hype and just say, look, Bitcoin is not great at the moment. It's all very Bitcoin dependent, right? So don't just jump into these trades blindly. But it's a very difficult thing for people to understand because, it's taken me a while to understand the money flow, and it's not quite. But if you look at Hola Prime X and you look at the Bitcoin update, that informs top altcoin picks, right? And you put those two things together, and you then should know kind of the size of your position should be based on the risk because of the context of the market this week, or even just not trading at all. But we like to provide setups for everybody to trade so they can do it any way they see fit, long or short. Because if I'm presenting a bullish setup, well, you can short it, right? You can do that. So it's okay. Use my charting and then trade it any which way. But yeah, it's always a challenge for me, just presenting setups. But hopefully we'll have some better weeks than worse weeks.
Absolutely. That's all we can do, right? Wait for some clarity and clean price action. All right, but our time has sadly come to an end. Andre, Robert, Lola, James, everybody else watching, thanks for joining us. Thanks that you joined us today. Igor, Paul, always great to see you guys. Have a great evening. And the next session starts in half an hour from now. So, but from us, have a good evening. Safe trading. Wait for the clean setups. Cheers, guys.
Thanks, Jannie.
Bye-bye.
Hello, Michael.
Hey, ka-ching,
How are you
ka-ching.
doing? How are you, my friend?
I am absolutely amazing. Got him,
Good
got
to
him,
hear.
got him.
Good to hear. Just
I see
waiting
you
for
green in
Aymane.
the back.
Sorry?
I see you green in the back, so I already know how your trading day
Yes.
went.
It went pretty well. Pretty well. Only took one trade, but that's all it took. That's all it needed, even.
Right.
So I'm pretty happy. I'm pretty happy. Had a strong bullish bias. I got actually quite lucky because we did have this big drop that happened not long after market opened for, I don't know, I guess it just came back to retest. But either way, yeah, I got lucky that I didn't get stuck in that or anything, because that would have not wiped me out, but would have definitely stopped me out. But yeah, we'll just wait on Aymane. Not sure. Well, there he is. He's just popped in. Aymane.
Hello, hello, hello.
Oops. How was your trading day?
Actually, good today. It's my NFP
Okay.
week.
The dream team then did great. Everybody said the same thing. Dream team, dream team.
I want to know though, Aymane, did you buy or sell today?
Actually, both.
Oh, okay, good. Me too. Me too.
Both. Both. I bought. I think I sold first and then I bought. It was just.
Oh, you did both. My bad. I thought you said you bought. Okay.
Oh, okay. I was gonna let you finish on say Sam. I thought you said you took one trade. How'd you go? How'd you do both?
I misunderstood you. My bad. Yeah. But yeah, no, I only took one trade and I bought it. But yeah. In fact, let me just I'll pull up the charts real quick. I'll show you, because mine was nice and quick. There was no what do you call it? Not much really. So can you guys see my charts? Should be able to.
Yes.
Yep, cool. All right, so today I literally, just as market opened, I just bought into the actual open. So I was already bullish, 100% bullish today, my bias, because of this area here, that gap. We touched it on Friday, and then I took that position on Friday. I think you guys remember. And if I look on the volume, so let me just zoom this out and move to the low of the day, which was, there it is. So the low of the day, just look at all that volume trapped at the bottom from the sellers as well. So I knew, again, kind of lined up to my initial bias of that volume is now trapped nice at the bottom. So that would be these people here. They're all trapped. So I didn't think they'll ever let them out. Could potentially come back to this area, but if it does, then I'll just buy into it. But as market opened, we were like here, and I literally just bought up into the next gap. And at that time, there was, I can't remember exactly why I exited. I did see something, but it was on this chart. That's why. That is why. So as we opened with a lot of momentum to the upside. The moment I saw those, what do you call it, buyers getting in, I thought it was, yes, now I remember correctly. Of course, now I remember. My bad, I completely forgot. But if you remove the volume profile real quick, this is why. So we had a gap, a tiny little gap from the weekend to now. There was this tiny little gap here that I thought we'll close. And as the market opened, we literally just closed that gap. And I got out pretty much at the top of the gap. So I got in as the market, as all the buyers come in, got out. So it was like, it took maybe 2 minutes. It was a really quick scalp if I go into the 1 minute chart. Yeah, literally. I jumped in. Like here was market open, went really bullish, came back, retested this gap right here. And I literally just did that. That was like my trade into this, into that, just to close the weekend gap. it took like a minute literally to complete. It was really quick, bang, bang, in and out. So really nice. And then after that, I left it. But then, don't know what the hell happened here. Came back, almost went to the lows. But I was already off the charts at this point. That shocked me. I'm assuming, Aymane, you shorted around here, where it plummeted for no reason. Please tell me you shorted that.
Yeah, actually, yes.
You did.
Oh,
very good. Very good.
Yeah.
But yeah, that was pretty much it for me. Very simple. Was there more opportunity? Absolutely. This box here was a gap at the time. It's now been filled. But if you go to the volume profile and you draw it based on how it looked at the time, so if you go to like there, you can just about see it's not that great, but there was a gap there basically. It's weird. TradingView when you do it like this, TradingView doesn't quite show how it looked in real time, but this looked a bit more prevalent, this gap. But there was a gap there. Came back into that, and then we just shot.
My bad. Funny enough, I do want to grab this quick trade here. I do see.
Go for it.
Sweet. So funny enough, you're gonna laugh at this, but this is a great continuation trade. This is actually for me, nicely done on the S&P, right? So reason being, we got a nice 5,200 cross. This nice little head and shoulders pattern. Shoulders, head, shoulders, close above. This is nice. So I want to go ahead and grab this now. This looks like this is at 58.57. So I'm gonna go ahead and buy this. I'll put the full 1% on this. Actually, this is pretty nice to say the least.
Very nice.
So I'm gonna go ahead and buy this. Get us in. I'll get into my other awesome trade today, but I just want to get into this first really quick for the people. All right, sweet. So we're in. Let's go ahead and go to the TP, which is about 59.95. So let's go back to here, 59.95. 95. Cool. And we're in and we're set. Good to go. This, to be honest, this could have got a little bit better price, just to be totally honest, but because we could have, once this closed up, you could have grabbed this about an hour ago, right? Yeah, actually 2 hours ago, really, but still relatively in the same area. It hasn't ran anywhere really just yet. So, and we still have a nice 1-to-1, really a 1 to 1.5. So still a great trade.
Just want to say, Jerome Powell's speaking right now, apparently. Yeah, he's speaking. Just check the calendar. He's due to deliver opening remarks at the Federal Reserve Board of Governors International Finance Division's 75th anniversary conference in Washington, D.C.
So now, Sam, you are using the market makers tools?
This is actually Forex Factory.
Okay.
I'm not using the market makers. I mean, Aymane, you've probably got a direct line in your earpiece to exactly what he's saying.
Right. That's how he said direct line. That's funny. Cool. I'm gonna throw my TP. My bad, not TP, but I'll throw my stop loss to break even point right around that ADR high. Let's put stop loss. Sweet. And yeah, when we get here, I'll go ahead and move this bad boy to break even. But that's about it. But yeah, just wanted to grab that really quick for everybody. Looked like it's going fairly well already, actually. We'll see how it turns out. But yeah, my bad, Sam. Go right ahead.
No. All good, all good. Let me just get back my screen. Cool. All right. Yeah, like I was saying, we came back down again, back into this gap, filled it. And then the real move of today happened, where we just started shooting up. I'm going to be bullish all the way until we reach these highs here. I'll still probably be bullish even after that, but I'd want it to break that area, right? So I'm still going to be bullish probably around here, but I am expecting some kind of rejection. Hopefully it breaks that area, comes back, and then we can continue being bullish. So if we don't reach that area today, which I doubt we will, but we never know, it depends what Jerome says, right? Then I'll be bullish again tomorrow, most likely. Could have had a nice trade probably about an hour ago. So we've got this nice gap here. Here's the point of control, just below the point of control. You can see we broke above it, created that gap, came back, retested it, the exact play I always say. So
Yeah.
broke above, came back, and then back to the high. Or you could target these highs here, which it looks like we're probably going to hit in the next 5-10 minutes, maybe. So that would have been a nice trade. It's a shame it happened just before the live session. Otherwise, I would have jumped into that. But yeah, apart from that, you got another trade you could have had here back, 4:30. Now we're at 6:10, so a couple of hours ago. Again, same playbook. Broke through that gap here, came back, could have jumped in there, back to the high, and then it came back in for another retest, jumped in there, came back to the high, same playbook. No gap has been created as of yet, but as we create new highs for today, there might be a nice gap somewhere, and then hopefully I could do the same thing again. It will give us a little retracement, jump in, same thing. But apart from that, that is all of it. So there were, on my playbook, there were, 2 decent trades you could have taken the last couple of hours, I'd say. But yeah, anyone who wants to jump in, feel free.
Yeah, I can take it. So if you don't mind, Aymane.
Yeah.
Okay. So for me, things were freaking great, right? I love the word that you just used. I'm gonna kind of use it to segue into what I want to say here, Sam, is playbook, okay. Right? Playbook. The playbook. It's so important to have that in your arsenal to really know what you're doing, right? So I'm gonna start with my trade on Friday just to kind of build some context here. But you guys remember on Friday I mentioned everybody in my group crushed this trade. I mean everybody. But I'm gonna point something out. This is gonna be really good. So watch this, right? So this is man, can I show this? Hold on. I'm gonna stop the screen really quick and then I'm gonna
I think we should join Michael group.
So check this out. I had to stop that really quick to point this out. Here it is. I'm gonna pull this up. Okay, here we go. All right, now I'm gonna reshare this. This is exactly what I'm talking about when I say how it's supposed to look, right? So when I bring up, just check this out. So I'll bring up something that looks like this, right? This is USD CAD on Friday, right? So when I always say M off the 200, that's just like a high level version of it. But what I'm really looking for is the pattern off the 200, right? Which I say all the time. That's why I put number 2 as pattern, not M or W or whatever. I'm really looking for the pattern. That pattern can be broken up into these 3 different things. The M pattern I always talk about, the half of bat pattern I talk about in the middle, and then we got the head and shoulders pattern I talk about, right? So I'm looking for that pattern off the 200 for this particular move in my playbook, right? This is the pattern off the 200. So this is USD CAD on Friday, as I mentioned. We got a nice left head, left shoulder, head, right shoulder, right? And as you can see on the far right, as the third picture here, this is the head and shoulders nearly to the T. Like this is the same exact thing that we're looking at, right? The exact same thing. And if you look at how it ended out, which we, really expected, right? 5,200 cross. Again, we're looking for that pattern off the 200, that Nice head and shoulders pattern, right? So boom, this was the trade on Friday. You guys remember this? We had, in addition to this, we had the outside the band, inside the band. The market baseline, as you see, is screaming to go down. So we know this is going down. It's just a matter of when, right? Beautiful trade. Beautiful. We had the reload within here and everything. So this is Friday, right? So just let's do this little three thing here, right? This was, I'm sorry, that was today. This is Friday. What happened on Friday, right? And then this is how it ended out, right? And then today, this is the head and shoulders pattern. And today on gold, look what we have. If this isn't the same exact thing, just the other way around, I don't know what is. 5,200 cross, head and shoulders. You got the left shoulder, head, shoulder. Once this close above, you're in there. You're in there. This trade was weird because, first of all, it was perfect. Again, let me add the extra context. You got outside the band, outside the band. The head and shoulders pattern will always be outside the band, inside the band. Whoops, I kind of drew over. Let me delete that. It would be outside the band, inside the band, like this one is, right? The M and the half of bat is outside the band, inside the band. But this one particularly will look just like this, right? We even had the reload, as I said. From this point, the market baseline definitely wanted to go up. Everything about this trade was the exact same thing as USD CAD on Friday. The only thing was, and I took this anyway. Funny enough, guys, Nerio Machado, the one who we interviewed, he asked for the interview on Friday, and then I sent him the interview. You know, he said thanks, and then he sent me a message and said, because he trades gold, and he said he was like, oh, you know, it opened up. Actually, I can just show it, to be totally honest. I said it opened up, gold opened up, and this is what he sent, right? He asked me for the interview here. I sent it to him. You know, then he showed me his charts, and he basically said gold opened up pretty strong, which was funny because I actually got an alert on gold on Sunday, which I really don't have my alert set for Sunday. But he explained to me what he was looking at, and this is why we actually got to have him on a live session, guys, because I know they wanted me to ask him, can he do this for us? And he said, of course, he'd be thrilled to do it. But anyway, he sent this to me. He said we was going to, and I said, you know, thanks for letting me know I'm gonna be in attendance to it. And I tell him I'm in at this price. The very next day, which is today at 8:03, he sent me this picture. Right? He said smashed. You know what I mean? So this, he, out of all people, I already seen this, and he who trades gold and is one of Hola Prime's top traders, seen this too.
Yeah.
This is the power of really knowing what you're looking at. Right. Absolutely. And again, this setup, how you mentioned the playbook, this is the same setup from USD CAD on Friday. Right? Except it's the inverting. On Friday, it was this, and today it was this. Same pattern though. Same exact play or setup out of the playbook. Yeah. Just amazing.
Absolutely. I always say this, you know, it doesn't matter. Every trader has a different strategy, so to speak. But a lot of the time, even though your strategies might be different, you come to the same conclusion, or you find the same entry. Some people might use patterns, others might use volume. It doesn't matter how you look at it. A lot of the time, it lines up. Unless you're Aymane and you're part of the market makers, then
Nah.
I'm the one giving you that order.
No, Michael is in a good streak. But I remember 2 weeks ago, Michael, you told us the market start to giving us some back to normal and giving us some good setups. I think 2 weeks ago you mentioned that.
Yeah, 5 weeks in a row. Because for me, 2 weeks isn't good enough. But once 3 weeks kicked in, I said, man, it looked like we getting that Mona Lisa. Friday was a Mona Lisa. USD CAD, and yesterday, Sunday, on gold was a Mona Lisa trade. Gorgeous. Like textbook perfect, exactly how you would want to draw it. It panned out. So I told everybody, I'm like, 5 weeks in a row, that's enough data for me to say, hey, we back. We is back in here now. The market's then calmed down. We knew eventually that all of that madness would leave the market, the uncertainty, and things would kind of get priced in. But when was the question, right? From fundamental side, with them saying that, hey, you know, we're going to push back the trade war stuff, 90 days, whatever. And TA wise, we're looking good, guys. I'm excited. Today's June 2nd, first month back. I'm excited to get everything going. The rest of the year finna be killer.
Let's go.
Let's go. Yes. Let's go.
Let's go. Let me show you my
your screen's up.
What I'm looking for this week. So let's start with the calendar. So we have a really packed week, a lot of red folder news. So today we had US ESM manufacturing PMI at 10. That's why after 10 a.m. we saw a little bit like the market is trending on NQ and ES. Tomorrow we have US jobs opening at 10 a.m. also. We have on Wednesday, we have US S&P composite PMI at 10 a.m. also, and 9:45. Later during the session, we have some news related to oil. And Thursday, we have US trade balance. So every day there is a red folder news. And most of them are on like 10 a.m. Eastern time.
I saw the same thing, Aymane, except Thursday. Thursday is the only clear day where it's early at 8:45.
Exactly. Yeah. Like for me, when I see this, like the calendar like this, most of the time, if I'm gonna like take an intraday trade, I will wait at least after the 10 a.m. for example, here on those days. Maybe we could get some good trending days, but maybe after the news release. On Thursday, maybe after the market open, we could start having a good trend from the market open. And we have, of course, the famous like what Sam trade
NFP.
every month. NFP.
NFP Friday.
NFP. So we have NFP also. All in.
100% full margin. Highest leverage.
Yeah.
Remortgage the house. Do it all for NFP.
Yep.
It's funny. We saw the same thing, Aymane. I said the same thing to everybody. I'm like, Monday, Tuesday, Wednesday, news-wise is weird because we have late news.
Yep.
But Thursday is the only day, and then we have NFP on Friday. So Thursday is the only main big day, I'd say, to be super vigilant about, and make sure you're on your P's and Q's that day, because any other day is news is so late.
Yeah, it's important to make this let's say this game plan for the week. And for me, like the way I do it is by using the calendar. For example, if I will start my session at 9:35, so if there is a news at 10 a.m., I will not, even most of the time, even if I have a good setup before, I will not take it. I will wait at least 10 a.m. like the news to pass, and then maybe take a trade. But if I'm going to scalp, maybe I could scalp before just the momentum, because sometimes 10 minutes before the news, something you have a little bit of momentum, like we saw today, for example. We saw this big push down before the news, and then the news came up and we reverse. So for me this week, it's a little bit, how to say it, mixed feelings. So we had, it's a little bit, it can be tricky, and I will say why. So on the weekly, like, yes, we touched this supply right here, 21,842. We close inside those weeks, this resistance right here. We have this big push, and after like this week, previous week, we touched the supply, come back, close inside the resistance. So from the weekly, yes, it's showing us maybe we're gonna go lower, at least to the 2,974. But when I switch to the daily, I have a ranging pattern. So for me, I'm expecting, even it's a little bit crazy because it's NFP week. Normally it's very volatile, but the range is a big one because 700 point range. So you can see here we took the previous candle high, close red, and here also we took the previous candle low and close inside here. So we could see like just we will range between this high and this low. Of course, we can break a little bit higher or lower, but this is how I see it for now. I could be wrong, but my expectations will be a little bit low this week, just simply because of the weekly and the daily. I don't see something. I see just maybe a ranging between, let's say 22,000 and let's go a little bit lower and 21,000. So between 22,000 21,000. We saw this pattern before and we saw a little bit the market slow down. So you can see here we took this previous candle low, close green. Here we took the previous candle high, and we are still also in the same area. Yes, we broke a little bit lower, but we came back. So this is for the daily. The weekly, yes, it shows us a little bit. Maybe we will go back to this 20, let's say 21,000 support. And we should not forget that we have a gap here that's still not filled at 20,385. Oh, sorry. So yeah, so in terms of the trades I took this today, actually I bought first.
Can't wait to see this.
Yeah, it was actually a continuation. Yeah, so the first trade basically was a little bit risky. So I bought here at the top simply because, but it was a 20 point trade. And I remember when I saw big order here, like before this candle to start, let's say to close, I thought like maybe we will start absorbing here, some sellers step in and we will come back lower. So simply I saw this 89 cluster, and in my 30-second chart I had similar candle, took the previous candle low, close green, and I trade simply just the continuation, and I got out very, very early, something here. So just 20 points. So this was the first trade right here. It was a little bit risky, but we still didn't took those highs. So my aim was this big cluster at the top, just to take out those highs right here. I think it was a good timing because after you saw that the market really turned, after 10 minutes we turned red. So the short, I was a little bit, I missed this first short right here. We took this previous candle high, you can see here in the 3 minutes, close red, and we still get the continuation. So this trade here, even though I had the confirmation on lower time frame, I didn't enter, but I took actually this one here, this last push. Same thing what happened here. So we took this previous candle high and still close red. I got the confirmation also on lower time frame and trade the continuation. So yeah, and then after I'm done. So on Mondays, even though later I saw that,
that was crazy. That's what I wanted to see. You hit both of those right on target, because
yeah, but you know, I am just a normal guy. I'm looking for a one.
Nah. See, this is exactly why we would bring up the market maker thing.
No, I'm looking just a risky reward of 1.2, 1.3. I'm just struggling to.
It's hilarious.
Yeah. Sam is the GOAT. Sam.
Not anymore. Aymane, you've taken it.
Not yet.
Taken the trophy.
Yeah.
But no. You would be the GOAT. You would be if you traded S&P. If you want to be the GOAT, you know what you have to do, Aymane.
No.
Have to give up the NASDAQ. Then I will officially say here, live on stream, Aymane is the GOAT.
No, the Aymane is the GOAT.
How many points like ES moved today? 5 points, 6 points?
50,000, man. Can't even measure
it. Well, Michael, check this out. From the low till the high, 55 points. Okay.
Unmeasurable. That's how much it's moved.
Michael, let's check NQ. Okay. So from the low till the high, 240 points.
Almost 5 times as many. Dang, that's 80% more movement. That's crazy. That's a good point.
I think your USD moved more than
It probably did. That's the sad thing.
It's same.
Just about
same.
5 pips away, 5 points away.
You see, from the low.
That's hilarious.
Well,
you're hilarious for that.
Yeah, but it's okay. We are joking, Sam. You still make money from it, so it doesn't matter.
It's okay. ES is just, you gotta be a certain type of trader to trade ES. It's just
what type? Slow.
Professional. Gotta be on point. You gotta be like switched on.
But it's true. Like ES needs a lot of patience if you are really patient, because you have really to wait. Yeah, to wait a lot.
You gotta wait too much.
It's all good. I like how ES moves, nice and stable.
But you are right, Sam. Because when I checked ES a lot of times, like he's respecting the structure. He's like Euro USD, let's say, in Forex. So he's really respecting the levels, respecting the structure. So I agree with you in this part. So
yeah, I'm gonna actually look at NQ.
Y'all hilarious over these two. Which pair is better?
Sorry, Sam. What you said? You will check.
I'm going to check NQ. See if the trade I would have entered today even would have been possible with NQ.
Okay, but target the same point you target on ES. It will be quick, in and out.
Well, it was like a minute for ES as well. But now you see, look, see, ES, I would not have been able to get into the trade. It never pulled back. Let me. I'll show you. See, this is why. Sorry, not ES, NQ. All right. So we're looking at NQ. There's the gap, right? Market opens, blows right through. Where is the pullback? Back into that gap. Right here. Where's the pullback? There is no pullback. It just keeps going. So I would have missed that trade.
Because it's not a real area, that's why.
It's real enough that it rejected here, as it was plowing down. There was the rejection, but then naturally it dropped, and then it broke through, came back from the other side, kind of rejected, broke up, and then it went up.
But now, Sam, we should
agree. Yeah, I wouldn't have been able to get that trade. Yes.
If you want to judge NQ, you should not judge it on Mondays or Fridays. Maybe Tuesday, Wednesday, Thursday.
It's funny you say that, because like you tell me, Mondays is weird, Fridays is weird. When I'm trading the ES, it's like every day's a Wednesday. It's just perfect. There's no.
You got
no strange behavior on it. No, I'm joking. Fridays can be weird. Friday.
I don't know if Robert is here or not.
Oh man. Yeah, that was a good one.
Yeah, he got me on this one. Yeah.
Yeah, that was a good one.
Yeah.
To be fair, there would have been a trade. Yeah, you could have still.
Okay, Robert's here.
Afterwards, so the news I got, I would have missed that. But then it did come back after it broke through here. It did come back, touched it, went back up to the high, so that's good. And then when it created this gap and broke through it, it did come back and push up. So you could have got the last two trades as well on NQ as well. But the initial trade actually never had a pullback, or at least not enough for an entry. So, and where was the actual? Oh, this is a good idea. Where was the actual weekend gap? So it was right here, the weekend gap. So that's the weekend gap. That would have been my take profit. And yeah, it went a lot further though. Like ES stopped maybe a candle after closing the gap from the weekend and then reversed. NQ just kept going. So there is slight differences to the way they move. I don't know which one. To be fair, I mean, it's 50-50 because there'll be days where ES doesn't do exactly what I want it to do, but then NQ did it. And I'm like, NQ would have been better. And then there'll be days, other days where...
This one is true. Like sometimes that's why it's better to stick just with one. Just if you like more, let's say, a slow asset, for example, just ES. If you like more, let's say, fast a little bit and there is action, can choose NQ. NQ is better, but
because it does. NQ does respect stuff quite well. Like, look at the gap, right, from the weekend. Tiny little gap. You can just about see it, right? On ES is a bit more bigger, the gap, but that is the actual gap, right? But it gapped down. Well, you could say the gap starts there because that's the open. Sorry, no.
Yeah.
That's the open. Or the open's all the way down here. You could say that's the start of the gap, but it did. That's how much was left before it even. That was left, untouched. And then when we came back up and it came back, look how well it did respect it though, to the T right there, that wick. So it does respect areas very well as well, but I feel it can overshoot a little bit more because it moves so much more. Do you know what I mean? It's kind of like a car that's traveling really fast. When you slam the brakes, you're not going to stop straight away. It's going to take you a little while to slow down and stop. You're going to skid for a while. That's what I feel like NQ does sometimes. It kind of skids.
That was a good analogy.
It reverses.
That was a good analogy.
Yeah.
Mm-hmm.
All right, y'all gonna kiss and make up, or
Hey, I have no issues with NQ. NQ is my friend. I like it.
Okay.
Just saying though.
So I actually what was that? I'm sorry.
So if Aymane wants the title of GOAT, then he needs to trade ES.
Aymane.
I wonder if
no. I'm good.
Gotta switch over.
Maybe in the other life.
Maybe in another life.
So if you want, right?
Uh-huh.
How you mentioned NQ when y'all talk about NQ and ES, that makes me think of gold and silver.
Look at my name on StreamYard right now. If you want that title next to your name, Aymane.
No, it's not fair, guys. Come on, you have access to those things.
I could give you the title right now. You just have to say ES is better than NQ. Go on, Aymane.
No.
Oh, you guys are hilarious.
No.
Hey, check this out though. This is with this gold trade today. When y'all say ES and you say NQ, same thing for me on a much smaller version for gold and silver, right? Because gold made a nice move. And something else that was super cool too is on market maker structure style. I always say, just look at this. There were orders all below, short orders pending all below this. They came to this one point and grabbed up. This is probably, there's no telling how much. If if this is a let's say Forex particularly, but $5 trillion day market, let's say $3 to $5 million day market, so many orders got picked up right here that it's ridiculous. And they yanked it away from them so hard, and they just still negative accounts basically. But so that was nasty for one. But when we speak about gold and silver, or NQ and ES, same exact thing, right? Like this ran, gold runs, but sometimes for some reason I feel like silver just takes the cake. This thing is almost at like a 3 at this point. Like it's already gone 3 for 1. Almost the same move, just much uglier. I actually don't even really like to trade silver because it just looks kind of funky. Right, but same move, just as gold. This doesn't count obviously because the market baseline is much higher than the static. But from here we got outside the we got this outside the band for here, right? Inside the band, this one touched it, and then it's basically on it. So I'll say on the band. But the move obviously was on this candle here when it's closed above everything, right? You have this nice structure here that closed above this key piece here. This candle is the only one out of all of this, right, that closed above.
You Michael, you took gold.
Yeah, I took gold. I didn't take silver though.
Okay. So Michael, I have a question for you. Like when you start the week with a, let's say, a good percentage, you are up good. How something changed for Tuesday? Like you changed something on your trading? Maybe you take less trade, or you continued same way when you have a very good Monday.
Yeah, I would trade the same way the entire week. Nothing matters or changes except for, I would say, I can kind of like type this up, but the only thing that kind of like matters is, I would say, main account trade, right? Is this a main account trade or not? Or is this what I would call a scratch the itch? Scratch the itch trade, right? These are my first 2 questions, and after that, I'm like, is this an A or B setup? Right? Then I'll ask myself, it's either going to be 50% or 100%. That's really all I ask. Am I taking this on my main account, which again, I got a lot of accounts connected, so it's like a lot. If this is a main account trade, then this goes on not just my account, but everybody's account, and all my accounts connected to it. If it's a scratch the itch trade, it's more of a, I'm just going to take this on one of my accounts, but I'm not going to take it on all of the accounts.
Okay.
And then from there, is this an A+ trade, which should be 100%, or if this is a B trade, and I'm only going to put half on it. That's the only thing I ask myself.
Okay.
Hope to answer your question.
Yeah. Thank you.
Yeah, and if this happened on Monday, then so be it. I mean, at the end of the day, like if it comes to Thursday or whatever it is, I wouldn't change a thing outside of this. Like that's it. The only thing that would matter is NFP Friday. Like I'm not gonna take any trades on Friday. But if I was up big on my main account and let's say it's crash this account, maybe y'all put like a little something on there. But it has to be clean. Like it have to be really clean. Otherwise, I just want to be able to walk away on Friday and say, I got them this week. And, you know, I'm up X amount of percent. I followed my process, and that's going to carry, because the main thing is carrying that momentum in for next week. And even though you're not supposed to, I'll say, think about your last trade, but if you know you're killing it right now with your process, I will carry my momentum from my process in if it's good. Like, right? Like if it's bad, like I know what I messed up on, because just similar to what you said earlier today, Aymane, is on Sundays, I do like a small something. I get on for like an hour and I look at what I did good, what I did bad, what I missed out on, what I could have did better. And then I look at the news for the next week. And I change and tweak anything if I need to based off new information every Sunday for like an hour, typically 8 to 9. And I just go with that into like the next week. So news, how you said, that's how I knew on Thursday is the best week to trade, because every Sunday I check out the news to make sure. But beyond that, I also, just recollect and reflect on, hey, you did a great job last week. Just do what you did last week again this week. And or you know how you messed up on this little key piece right here last week? Don't do that next week. Like, keep that, remember it, learn the lesson, move forward. And I like it every
for me, to be honest, because I am also, let's say, in a little bit a good winning streak. But what's making it like just like a routine? It's more base hits mindset. So base hit. So I'm sitting looking of 1 to 2, 1 to 1.5, 1 to 1.3, just 2-3 trades and done. And just like you sit, do executes, done, 2-3 trades, but those small profits, 400, 500 here.
Yeah.
When it accumulate, the compound work with you. So this is the main focus for me now. It's just I have also a couple of accounts, copy some of them, copy the other between them. So not all of them copy in once, but
same.
like putting groups. But the main thing is just those base hits for me, like those base hits, those small profits, 400, 500, 600, 400. Like when you accumulate those profits at the end, it gives you a good amount of money.
100%. Because at the end of the day, if you hit 3 base hits, that's a home run. You're gonna have your days where you banged it, right? You hit your 1 for 1, you hit your 1 for 2, 1.5, whatever it may be. And then there's other days where you'll just a base hit, you made a little quarter, a little 50%, a little 75%. You do a few of those, and that is 1 or 2, home runs. And you got to think of it like that. You just have to. Otherwise, you always chasing the money, and it's kind of hard to let that go.
Yeah, and the worst thing is chasing the home runs, the home run trades. Every trade you are looking for a home run, 200, 400 points. So you are missing a lot. Just a lot of opportunities just next to you, just because you are looking for those home runs. And imagine like how many trades you will lose just to get this very big home run trade. Ask yourself what your psychology will be before getting this home run. So it's a mix. Yes, it's good to have home runs, but you need to be experienced trader to know when it's home runs, when it's not, when it's base hit, when it's home run. And you need time.
Funny enough that you even say that, like the statistics on that isn't really high. Like we know about baseball, we say home run, whatever, but a home run is actually not a thing that happens all the time. Like it's almost like a game-winning buzzer beater. Like you might have won the game because you slowly scored more points than them. Those were base hits in another sport. There is no, he hit 33 pointers in the game and he won. That's why they won. Like that's not how it goes. It's a small, consistent base hits or 2-pointers and dunks and layups that wins games, right? It's not the home runs, the 3-pointers. Does that happen in some games? Of course it happens. That's why home runs happen. But at the end of the day, in the game, that's how it works.
I found that like the trap that the trader have is like they remember always the last memory. So let's say Friday, it was a very good home run trade. So when they have like you said, this Sunday they check up their trades. So starting Monday, they change all their plan based on this Friday home run because they missed it, and they still turn in. And I was one of them that I stay turning in the same like wheel, turn. Why? Because I remember just the last experience. Home run, I missed it because I took base hits. And then I switched to home run, and then it will be just base hit. So it's really important, like for me, like if as an advice, but it's my opinion also, like just focus on base hits first, and then when you get experience, you will try to combine both of them.
You're 1,000,000% right. Like even remember when we had the because it even happens now. Like I was affected by that not too long ago, right? I made the same mistake when we had that massive crash, right? And the market was moving so much and it was just shooting off without, you know, any retracements, whatever. Every time I got in a trade, I was like, oh man, damn, look how much money I left on the table for getting out. Like it went so far, it smashed to take profit. And I should have held. What did I start doing afterwards? Remember there was like a period, like probably like a week. I was like, I'm holding this. I'm holding, trying to catch
target in the sky.
run. Exactly. And what would happen almost every single time? It would go my way, and then it would come back, and then I'll be forced to either get stopped out, get out at near break even, lose my. And I was just like, nah, this is. And then since the market's kind of gone back to normal, I've kind of gone back into my old mindset of when I'm up a certain amount and I can see that retracement or something I don't like, just get your money and get the hell out. That's what I've been doing now. Not trying to target, you know, stupid amounts, but the crash affected my psychology. Something that I was trading like that before. Always get in, get out very quick, not holding trades. You know, that was like my thing at first when we started doing this. Like I never hold trades. And then all of a sudden the crash happened. We moved so much.
The thing, Sam, is like you notice it and you came back to your habits. But most of
we call it back to the basics. Sometimes you got to get back to the basics. That's how it goes. Remember what you were doing to even get you here in the first place.
but the hardest part for someone new is he's not conscious. He's not conscious that he's doing it.
Yeah.
So he's changing some small things, and those small things he don't feel that he changed something. For him, like he's putting in the work, he's changing things, but he's sabotaging himself.
Yeah.
So why? Because of this thing of remembering just the last experience, and this is the hardest part. Remember, the last trade was a home run. I missed it. So the solution is let's hold the trade, and then when they got the bad experience from holding and come back to their stop loss, and then they start and they stay there for a long time. So
I think I might have touched on this topic, and I don't know what session it was in, but I listened to so many books, so I can't even recall what book this was, but they was talking about Tiger Woods. You know, like in trading, they would correlate trading to what's the card game? Poker. So trading, poker, and golf. They correlate to golf as well, funny enough. But I might have mentioned this story before, but it was, and I'll butcher the story just a little bit, and I don't remember what book it was, but the points is still there, right? They were watching, it was two guys, I forget the names, but they were watching Tiger play in like some tournament, of course, and he just crushing them, like he's killing them. And they're like, and one of the dudes like, yeah, Tiger's great, right? He does like all these great things. He's amazing. He's like, yeah. He's like, would you believe that I be in practice? Like I beat Tiger Woods all the time. And like, yeah, you know, whatever. Like, you know, stop lying. He's like, no, I'm actually dead serious. Like you can ask him, he'll tell you that like, yeah, I actually do get him in the best of practice. But he was like, but you know what makes Tiger the best in the world? Well, he was like, well, why you aren't there? Why aren't you out there instead of Tiger? He's like, you know what makes him the best in the world is he won't like when he gets to his holes, or I don't really play too much golf, so I don't really know what it's called, but the holes, he won't remember when he messed up on the last one. He said, me, I'll beat myself up if I missed something that was easy and I'm carrying it with me to the next hole. And like eventually I'm on tilt, basically. And he said Tiger is a master at messing up on one hole, getting to the next hole, and it's like that never happened. It's like he totally forgets that he messed up, and he slowly but surely sometimes just pulls away, compounding skill, and that's why Tiger's out there and he's not out there, right? So correlating that to trading, feeling like that you took a bad loss, or you're emotionally trading, or you know the flip side of it would be, you know, you're on a winning streak and you can't miss. You got to follow the process, do what you always do, and just know that was the best you could have done. You know what I'm saying? Like, and not carrying that loser with you to the next one. Just kind of staying even killed, as we always talk about. Just very, very even.
Yeah.
But yeah, just wanted to say that it's the same exact thing with golf and trading. Like carrying that loser with you to the next trade sometimes can be your best friend or your worst enemy. Like, yeah, you want to build on the confidence. Like, hey, I did everything right. Like how Aymane, you saying you want a winning streak right now. I feel like I'm on a winning streak right now. I'm doing a pretty good job. But it's one of those things where you just always want to still stay in the middle no matter what. You can still miss, but don't carry your last loss with you either. It's that walking that fine line. So
you got to ask yourself. I think every trader needs to ask himself, what's the aim of the game, and be real with each other. You know, the aim of the game of trading is to make money, right?
Yeah.
And if base hits is consistently going to make you the most money because you're just compounding, you're building it up. Even if you did some analysis and you had one home run trade every month, and that would make you the same amount, psychologically, that's going to mess you up. Or the losing streak is, do you know what I mean? It's just not going to do you well. And you got to just understand the aim of the game. It's like you brought up sports, Michael, and like in boxing, if you look at like who's probably the most successful boxer in terms of record, probably Floyd Mayweather, right?
Mayweather,
undisputed, never lost.
Yeah.
But he's not exciting to watch. Yeah, he doesn't knock anyone out. He's just pure technical. You know, he knows he'll win on points, but he gets results. That's what.
That was a perfect example.
This is a really good example. Yeah,
you know,
really good example.
It's just that's the aim of the game, to win.
We want to see Mike Tyson knocking somebody out, and it's exciting. But has he been knocked out and his record worse than his? Yeah, it is. It's much worse, actually.
Yeah.
So,
that was really, really good example. Perfect.
Man, that was a good example. Once again, I got to give you that. That was a great example.
Like
we're gonna call any base hits trade. We're gonna call it the Mayweather trade.
The Mayweather. Okay. We should call it the Mayweather, but this is.
You know what? That was good. I might have to use that, Sam.
The base hits. Like if you are watching this live, one thing you should remember is, at least our opinion is base hits. It's what will get you there, and psychologically you will be better than when you will be looking for home runs. So psychologically,
the emotional equity. The emotional equity is there still.
Yeah. For me, I am preparing with base hits. Maybe I will stagnate. I don't know in English if it's
stagnate.
Like stagnate. For example, 5 days, 6 days in break even. I know this. It's my statistic because I'm looking for base hits. But once I break the structure in PNL, it start trending. Like this. Yes, sometimes I stay in the beginning of, let's say, the account. I stay a little bit between day 1, day 5, day 10. Just go up. But the moment like you start to get the routine, get the base hits, it becomes just automatic. You sit 20-30 minutes, 1 hour, base hits, you are done. Psychologically is much better than losing day, and then big home run trade. So this is just my personal opinion. But,
and I want to touch on something too, right? It's actually pretty good because I was just speaking with everyone, and I'm like, like for me at least, it's always what I would call that Mona Lisa. It's always one great trade of the week that happens, right? So I'm gonna show this really quick because I posted this earlier today, and I was just talking about how what's going on here. Is it? Yeah, okay, here it is. So like I mentioned this earlier today, right? Main account trade. Scratch this trade, whatever. And I had this part up here earlier, but I just broke this down into all my trades, right? Number 1, master trade, that's 100%. I got to put my position on there. 2, combo trade, A+ trade, A trade, got to put my 100% on there. Same thing with 3. And these last 2, M&W, these are B trades, right? So I put a little bit less on there, but they're still great trades. Which everyone that I just showed you guys for USD CAD. And for gold today, those were number 4. So that was still 0.75. However, on USD CAD, that was what I would call a super trade, which all the time frames line up, right? Like daily, 4 hour, 1 hour, 15 minute, all of them line up all together, right? But if you look at this, I brought this up to show this. The percent of trade of the week happening, right? If I don't have a good trade on Monday, Tuesday, it just kind of compounds because it's gonna happen, right? Like it's almost crazy that if it wouldn't happen, but 5 days out of the week, I'm for the most part, I'm doing it by 5, not 4, like this week, which would be NFP, but I'm just breaking up into 20%, right? So if my trade of the week gonna happen on Monday, it's a 40% chance that on Tuesday it'll happen. And the further it goes that it doesn't happen, you know, the higher probability that it will happen.
Yeah.
So this is like math within math, almost. And again, I'm just looking for one of these 5 setups to happen. And if it's just an A trade or a B trade. I used to have C trade in here, but I actually took that out because my C trade, what I would call a level 3 trade, and I just took that out altogether. Last quarter, in essence, told me that I should take those out.
Like I really like it. Like you really know what you are doing. You know the percentage of everything, and this is like what's you can see the experience just from what you show us right now. You can see the experience because you know exactly what you are looking for. You know exactly what you want. You have the confidence to say, this is what I'm looking for. This is my game plan. It happened. Yes, I will take it. If it didn't, it's okay. If I am wrong, it's okay. But I will repeat the same thing again and again and again.
You're damn right, Aymane. That's me right there. You just tap me up. Like I was like a fortune teller. That's me right there. You just said it. You just said it.
I'm the GOAT, of course.
Because at the end of the day, I know that's what got me from what the hell am I looking at? And I wish I can figure this out to, man, I was able to do all of this stuff for the past 5 years, right? Like, wow. I'm going solely off that information. I'm a living testament of stick to it, come up with a process, follow your rules, your process, and you can have all of this, right? And I'm still nowhere near as where I want to get to. So you're right. You hit that right on the head, Aymane. Yes.
Yeah. Like there is always levels. We all want more, achieve more, work on handling more, let's say, risk. There is in trading, there is always levels. So
like for me, right? Like even with like all my accounts together, like 1%, I couldn't. Like I said, I got like 10 accounts, like 1.2. But when I put my 1% on, that's like 12K. Yeah, if I get stopped out on 12K, damn, that sucks. But I'm still following my process. But at this level, I couldn't imagine getting stopped out and losing $1.2 million. Like, woo. I'm not there yet. Than 20,000, right? Like, man, you got stopped out on your main account. You lost 120K today. Wow. That I can't yet. Well, I can, but I'm not there yet. But 12K. Whoa, that's going. You got to make sure you're not messing up after this. You can only take, a few of those before you're done. But it's levels to it. As always, there's levels to it.
Yeah.
Well, if I can ask, what is like the max risk, Mike? You took in a trade, Michael and Sam.
1.5.
1.5 what?
So with all my accounts, like what I'll do now to this day, but before, man, I will put everything I got on this trade with leverage.
What 1.5K or mil?
No. Like to this day now, 12.5. So like $12,500. That's like the max I'll put on my main account on all my trades. $12,500. That's the highest I'll go.
Like if you combine all accounts.
Yes.
Okay. Okay.
Because again, for me, that's still just 1%. Like I said, I got 12 accounts is 1.25. So 1% on all my accounts. That's still only $12,500.
Yeah. Okay.
I mean, biggest I ever risked. I mean, are we talking back in the days when?
Right. Leverage.
Do you know what I mean? When?
So,
or are we talking when I was like consistent and profitable? Talking pre-profit or post-profit?
Sam is very humble. He said, "Guys, are you sure you want to hear?"
No. There was a time.
3 lifetimes.
The thing that turned me into what I would say a consistently profitable trader was probably the most painful experience in trading I ever had. And that was doing so damn well, building up enough money, right? And profiting like over 3 weeks. I'm not even joking. I had like one loss or something, and I was scalping like every day. I was smashing it. Don't know why. It was just like I was doing so well. I thought in my head, oh, this is it. I've cracked the code.
I cracked the code, the matrix.
And then I remember this clear as day. I upped my risk so much. I entered such heavy lot sizes, and then I entered like multiple times. You know, when you see those screenshots of people boom, 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 boom.
Yeah,
like I did that with like a really high lot size. And that was the trade that humbled me. It had to be that one. Is where the winning streak ended, and it wiped me out. Wiped me out. I can't remember exactly how. Well, I do remember how much, but like I don't even want to say. But it was like close. Let's just say you could have bought a brand new car for this kind of money. Like it was close to like 30 grand in a matter of, I would say, less than an hour. Like wiped out. And that is what humbled me.
And especially when you said like you were consistent scalping every day.
Yeah.
This is what hurt, because we all had similar experience. I had the similar experience, but not 30 grand, of course. But you work your teeth every day, every day, and then just one day you lose everything. And seriously, like you feel like you did nothing in the whole month. For example, if it's 1 month, nothing, just you came back to zero again. This is really tough.
That was painful. And the thing is, I got lucky, right? Not lucky. I got lucky earlier. Like building up all that money, I was over leveraging massively. I was over risking way too much for my account size. Like that month, I know this sounds ridiculous, but I think my starting balance was around like 6K. And when I lost it all, it was like hovering around like 32 or something. So I like what is even the math on that? 100% will be 12 grand. Like I did at least like 500-600%. Like I was massively over leveraging, and I thought I'm gonna hit 100K.
Tell us, Sam, about what was happening in your brain from day 10. Let's say you are in a good winning streak.
I thought I was untouchable. Like I cannot lose. I cannot lose. Do you know what I mean? Because in my what I really like, I had drawdown periods where I had drawdown. But you know what I did that was really bad? And I only know now that it was so stupid. I'm sure you guys have probably done this before when you're scalping. So you enter a trade. Say I bought, right? In fact, let me show my charts and then I can explain that a lot easier. And this is something I learned. Never, ever, ever do this again. Because this will one day, and this is how it wiped me out.
DCA? Like you DCA? Like you bought a price?
This was years ago. So imagine right now, right? That let me go on like the 1 minute chart, right? Imagine you sold here, okay? You entered a sell position right here because you think it's going to go down, right? But it keeps going up, okay? What I used to do then, right, is I'll enter another sell here, right? And then I'll enter another sell, and then I enter another sell until I like reached my maximum limit. And when the market started pushing down, the moment it got to like here, I was at break even probably. And then it will push down a little bit more, so I'll get out. And I would make profit, right? And maybe like 1 or 2 trades would have been negative. So I would, do you see what I'm saying?
Yeah.
Right.
And the one time where
what they call this strategy, martingale, I think.
Martingale is when Martingale's a bit different.
No?
But essentially I was, I would obviously not just enter blindly. There'll be reasons to my entries, right? But like I would stack up trades.
Dollar cost averaging, like you.
Like averaging it out higher, right? Okay, so, but I was doing that to like the borderline of what my, that's how I was able to grow that account so quick, because I got lucky that I never got liquidated earlier, because you can easily get margin called like that. And then one day I like doubled my position size, literally doubled it. And that was the day where the market was like you know,
What's
it
the
like pushes
chances
down like
of
that. Was the day where it just kept going and going, and there was it never retraced, it never came back, it just kept going. And I saw the money just dropping, and I was thinking, do I get out? Do I get out? And I was like, no, it'll return, it'll return, it'll return. And then I could see it, like my profit going, and I remember I just had to exit because I didn't want to go to zero. Do you know what I mean? I didn't want to completely go to zero. I was forced to exit, and I remember just sitting there and thinking, what the hell have I done, man? I never even withdrew a penny from that money as well.
That's the worst right there.
I was trying to compound it to like 100K, and then I was like, I'll treat myself. I'll withdraw when I hit that. And but look, it was an expensive lesson, theoretically expensive, because the money, all right, I made it, but I lost it as well. So technically, it's not that bad, right? Right. It's hypothetical money because I never withdrew it. But
they say you got to get it on the boat so you can hang it on the wall. It's the saying.
I never repeated that same mistake again. Like that pain was so bad, I've never done it again. And that's where my discipline came from. And a few times where I start to deviate and slowly those old habits or those bad where I want to break those rules, I think about that time. Or like I have done it where I've kind of tried to average my positions to get a bit of a better price. And I'm thinking, what am I doing? I'm putting too much risk on the table, and I just get out the trade. Get out. When I realize I'm doing it, I'm out. Just force myself to exit.
Sometimes, and especially if you are scalping, you know it's not a good trade from like just 5 seconds, 10 seconds into the trade. Like for me, like sometimes, like I start to do this. I said, okay, when I got the first, let's say, intuition that this is a bad trade, I should get out, and I see how much, let's say, I am down, and I remember the amount, and then it hits my stop loss, and then I say, okay, if I got out, will be the amount. Sometimes it's break even or plus 40, and then after the moment. Because we are saying intuition, but normally it's not. We are saying intuition, but normally it's not intuition. You are analyzing fast. There is a lot of confirmation. There is a lot of things. So you have this, like, you got this idea that okay, you should get out, for example. So I did this, and it was actually like it's like 10 seconds, 1 minute into a trade. You know just if it's a good trade or not, especially if you are scalping. But this story you told us, Sam, this is I feel it because I had similar story also. Like you work on accumulating profits for so, let's say, many days, many weeks, and you hold on. You said, okay, I'm not going to take any payout. Let's wait. Let's wait. Maybe build extra buffer so I can risk more. And then, boom, one time.
And actually, do you know what also messed me up on that trade as well? Although, so the market gave me an opportunity, a perfect out at one point during that trade. It did kind of go back. It went past my break even and gave me like a few £100 of profit. And I remember thinking, do I exit? But I got so greedy because I entered on such a higher lot size. I thought, let it run a little bit more. I was trying to get a home run. Because then I would make that much amount of money, and I had a figure in my like a figure in my head where what I wanted. The market gave me a base hit, gave me a nice little profit. I could have grabbed it right there and then, and it never came back to that spot. And they just kept going and going. And I remember afterwards, I was thinking, why did I just not exit? Why did I just exit? I should have just got out at that. It gave me the money, and I was beating myself up for so long after that. Oh
yeah. It's funny because like most of the traders have similar experiences, like just what you explained right now. You had a bad entry, let's say, then you went in drawdown, and then you come back, the price came back and gave you 1 or 2 chances, or even it went to your base hit to give you a little bit of profit, and you don't take it, and it's come back again and take you out. So it's the worst. Like there is a pattern that every trader is like experienced. So you cannot say something that if you are trading for a long time and I will say no, I didn't experience it. So I feel like we are experiencing the same. Maybe the dollar amount is different a little bit, but the impact, emotional damage
It's the same.
is the same.
It's like kind of what Sam said again, like the other way around, right? Because I didn't have, I would say, one big trade that did that to me, but I had a bunch of little ones. That's why in the book Trading the Zone, that Mark Douglas, when he talks about the keeps making the same mistakes over and over and over again, that was me. Like as a trader, like I just couldn't take it for some reason. I'm like, no, this has to be it. Like, no, there's no it has to be in this racket here.
Yeah.
So I took a bunch of stupid small mistakes. I'm like, I can't believe I keep making the same mistake, like again.
Yeah.
Like you did this again. And especially when you think you're so smart, right? Like you had all these previous successes, you think you're a genius. You come over here and that's just not how it works. So it always, that part is what humbled me. I'm like, you know what? I see that was my humbling moment. Like at some point, I'm like, I can't believe I did this for the 100th time. Like, and I'm right back to where I started again. I'm like, let's just try this for 30 days and not do that. And let's see what happens. Next thing you know, you up. Like, all right, let's do this for another 30 days. And once you finally realize, oh yeah, I was tripping the whole time. Like this is what actually works. Is sticking to your damn trading plan and your trading process. That's what works.
So true, man. It's so true. But yeah, we all need to experience it. This is the reality, though.
Yeah, you have to.
Because you won't ever learn. Even if you read Mark Douglas's book, you'll be like, yeah, but that won't happen to me. You always read like bad things that happen to people, and you say, that will never happen to me. Well, I don't need to lock my front door. No one's gonna ever break in. No one's ever gonna do this. Like you always think it will never happen to you, and then it happens, and then yeah.
And I found, like, for example, for the new students, if you are listening and you trust, let's say, your coach or the one who is giving you the information, if you trust, you don't need to experience much. Of course, you will experience, but you will not experience much. But if you are like me, who don't listen, I need to put my hand on fire and then I feel it.
Yeah.
And then, okay.
that was me. That was me.
Me too.
So
I know you said it's hot. It looks like it's hot. I can feel the heat coming from it, but I got to touch it on my own just to see. Ah!
Yeah.
Yeah, that was me. That was me.
Absolutely. No, you're 100% right. You're 100% right. That's just humans, man. That's just how we are.
Yeah.
But seriously, to be honest, coaches, like trading changed our like mindset, our psychology, our who we are, like a lot.
It
is. If before even money or something, finances, like when you see, for example, me before I know even trading, and now, like, I am totally different person than before.
Yeah.
So
100%.
I think to be a good trader, you need to have some level of maturity to it. Because if you have a very immature sort of way of thinking, don't get me wrong, like, I'm not saying if you're young you can't be successful, of course not. But like if you approach the market in an immature way, you're always going to end up getting humbled. Like, because you believe that
they're not talking about you. Like,
yeah, that's it. Exactly. You believe you're untouchable, and you don't know how quick things can turn around in trading, man. I mean, you could be at the top of your game, and then you could be at the highest high to rock bottom in 30 minutes. That's what trading can do to you.
Like literally, trading can, like, of course, you have to be trading for a couple months, years, but trading can change your life. You just, let's say, a couple of payouts. Last time, Michael, for example, he what's like you talked with this like he had the biggest payouts.
Oh, Netio Machado. Yep.
Oh,
Yeah, just like imagine you have some accounts, just two big payouts, and you went from making maybe $1,000 or $2,000 a month to okay, you made one payout 40K, 20K. So it can change so quickly, but again, it can also go the other way, like Sam said.
Yeah.
yeah.
And that mainly happens when you just keep breaking your trading plan and what you said you're not gonna do no more. That's when it mainly happens. Just to be
That's
honest.
the funny thing, man. That's the funny thing.
How you said
Like,
about being patient, I think of this all the time. Like I'll say like you know, my girl or my mom or somebody be like, "You're impatient." I'm like, I'm appalled. Like I trade currencies. I'm patient. I'm successful at this, at that. Like I'm patient. I'm just not patient with this right now, right? Like, but I'm a very patient person in general because I have to do this all the time. You know what I'm saying? Like, I want to take EJ so bad, but it's not ready yet. EJ, I want to show it quick.
please.
Actually, yeah, it might have. Man, this is so crazy. Yeah, EJ is so close. I'm like, man, sometimes just waiting is the biggest thing ever, right? EJ, super close. Look at this. So close, right? This is really close. We have our 5,200 cross. We're looking for that W structure off the 200. This is it. This is it right here. Man, I want to take this so bad, but I gotta wait. My alert ain't went off yet, right? And this is just for one, so I can't be too, you know, I can't jump the gun with this because my position size and entry, my entry is key for this to really work out. My margin of error is very small. I could be a little bit off, and it's less than one, and this would totally mess me up. So I want this to come up higher, and I want it to close above this piece. This piece that it did is so small that it almost don't count to me. This is small. It's like the same line. That's not good enough. I want it to close above this little area. Then I'll be confident in this. This can even close. Actually, no, I want to stay where it's at. Because I want it to close above this over here. This little key piece right here. Right, I want to close above this little area, which is where my alert is set at. See this? W off the 200. Boom. Soon as this sets up, I'm gonna be all over this trade. And then I know also that this is a JPY pair, right? So this could easily be traded in Asia. This might come up here, mess around or whatever, and then come up and close. And then it's ready. So I gotta be patient. You gotta be really careful and patient with this setup. But yeah, I just wanted to show that real quick. When you talk about being patient, I want to take this so bad. This is the same setup that, again, USD CAD. Well, this is a W technically, not a head and shoulders, but same setup. It's not the same pattern, but it's the same setup, which is the move off the 200. We can even look at the market baseline. It's shooting down, but now it's starting to curve on back up like it wants to, continue to go this way. We got the outside the band here. This is inside the band. This is nice. This came all the way down here. This came all the way down here, but yet this came down here and this came up here. Like this is slightly higher highs on this. So just gotta be a little bit more patient. Now I end up telling y'all tomorrow, yeah, I took EJ yesterday in Asia. I called this out in the session. This will be it when it's confirmed. Look at this funky little structure here. The next move, come up, bounce, retest this same area. This same area right here. Yep. This is a move. This is a move. Just waiting for it to happen. Like I said, I'm patient. I'm patient with it. It's not ready yet. What I've learned also is the times where the trade hasn't set up all the way yet, you end up sitting through unnecessary drawdown as you end up just chilling for a second and just waiting. you could have dealt with that and not been in the trade and watched it versus been in it and like, oh, you gotta check it every 15 minutes just to see if you up or down. That sucks. It's like it sucks.
Yeah. Drawdown is the worst, man. It's the worst.
Oh, we got 5 minutes here. This is drawdown. No one likes it. No, not even the prop firms like the drawdown, guys. You draw down if you want, so you can get your account breached. But check us out, right? Not much. I'm gonna go ahead and close the trade because we gotta get out the session here shortly, but not too much, right?
Yeah, it's normal 5 points or something.
Yeah.
This is a 1 hour.
If this was NQ, I'll be up what? 5? I'll be up 250 already.
Wow.
Yep.
Look at it move. NQ will be going the wrong way.
Same move though, guys. Once again, 5,200 cross. We got this nice little head and shoulders pattern, right? Once this closes above, that's it, right? You can target these highs. This is a nice, smooth market maker structure that I draw for everybody all the time. Same thing. Market maker structure, break and retest. Right? Same thing. We right here. Remember the W or the pattern off the 200 is level 2. So we right here in this cycle. That's it. That's
Very
it.
nice.
I'll be interested in taking it from here to the high, and that's about it. Yeah, I'll go ahead and close this on out. So we not stuck in here. But yeah, guys, that's pretty much it for me. Starting this week off absolutely amazing. We'll continue to crush it. We looking good, y'all. I just want to say that. June for the rest of the year, we looking real good. Let's get this going. Let's get this going.
Let's go.
Yes, more trades live, more setup, more profits. Let's make this happen.
Yeah,
I'm excited.
And then we will come to Mexico. Just
That's
to see
it.
Michael.
You did.
Yeah.
Let's go.
Let's do it.
Let's go.
Oh yeah, we're in June. It's my birthday month.
What?
So there we go.
When your birthday, Sam?
When?
22nd of June.
22nd. Okay.
20 days to before I'm an old man.
Okay, nice. We'll remember that.
I'll
we got to
be
send you something virtually since you probably never get it physically. Turning 21.
Yep. I'll be 22 on the 22nd of June.
You're hilarious.
What? Like,
yeah.
I got
totally
I wish. Nah, I'll be turning 34. Sadly. Well, that's not too
you're
bad.
still young. You are still young, Sam.
Nah, you're still in your 30.
You are still young.
You still.
Robert
good.
goes. Wait, what date? June what? June 22nd, Robert.
Yeah. Robert, you know the gift. What we will give him.
You get me
We're gonna give him a month subscription to direct access to the market maker. That's where he gives Sam.
No.
His 34th birthday.
An NQ t-shirt and NQ logo.
That's a good one.
I would rock that, man. That would be awesome. NQ t-shirt, absolutely. I'd rock that. And then people say, "Why are you wearing that?" And I'll be like, "Remind me what not to do."
That's hilarious.
Like, Sam, I love NQ here. Here, I love NQ. So.
If I ever go to Spain, I'm gonna find I love ES and send it to you, Aymane, because you're gonna have ES in Spain. That's like España, isn't it? So
yeah,
I'm sure you'll find it. I'm gonna find that T-shirt.
You guys are hilarious.
Yeah.
Oh,
yeah.
Man.
So there will be a lot of action this week. There is a lot of news. Be careful, guys. If you are trading, trade safe. it's NFP week, so Friday, of course, there is NFP, but every day we have red folder news. So make sure to check your calendar before you start your session.
100%.
$1,000,000%. All right, guys, we have hit time. Michael, Aymane, really good session. Michael,
I love
nice
y'all.
trade
I
as
love
well.
our sessions, y'all. Y'all hilarious. I love our sessions.
They're really good.
Thank you, guys. Thank you.
To Robert
All right,
as well.
Robert, Aymane, Sam.
Catch you soon.
Thank you, guys.
Have a good evening.
All right.